Morning, everyone, to day 3. Just one administrative announcement from me. I don't know whether Ross wants to add anything, but at lunchtime today, we have been invited downstairs to have lunch today. And in order to make that happen, basically, we're going to finish the morning session at 12, and the lunch break will be for 1 hour and 15 minutes, but that's to allow you time to travel, because the dining room that we're going to is actually at the front of the World Bank building. And so what you'll need to do is look for Leah. The bridge where you the area you come in through the atrium in the morning, Leah will be standing on the opposite side of the atrium, and will direct you downstairs to where we're having lunch. But we need to be, and the invitation is to everybody, we need to be speedy because of the travel time. And I'm sure there'll be one of the members of staff to basically cajole you and make sure that you don't hang around. You can talk downstairs, but not up here. So thank you very much to our colleagues in the World Bank for offering that invitation. Anything else, Ross, in terms of? Okay, so we move into the presentation of financial statements session. And in terms of sort of how we approach this, obviously we had some very good discussions in the breakout sessions in Riyadh, and obviously there was a range of views expressed there. The key thing today is going to be concentrating on how staff have actioned the points, and on looking at the drafting. And I want us to look at the drafting before we get into any discussion about whether we express a preliminary view or not. So, stealing Eileen's thunder here, but that's the order we will do things in. So we'll look at how staff has actioned the points, what that looks like then in terms of drafting, and we will go through the drafting to make sure that it's reflected the discussions and the various different views, and then we will see where members are at that stage in terms of their views on both the issues. So we'll follow that process for both items. So with that, then pass back to, I don't know if it's David as Sarsor's chair or Eileen.
For those of you who were watching the screen, she pointed and said it's David. So, I would want to echo Ian's words. I mean, today is important if we are to move the project forward. But I just want to thank the task force members for the input during Q1. We didn't meet, but you did have drafting to go through. So thank you very much for that. We also have a quick catch up at 3:30 this afternoon. So when we can mull over what's happened today so that we can take this forward. So I'll let Eileen take us through it now. Thanks, Eileen.
Thank you, David. And I wanted to make sure I still gave you the opportunity to introduce, and thank you to you and the chair for kicking off today. I'm sorry I can't be there in person, but I am looking forward to still being able to follow along with our session virtually and to deliver you the presentation before we open up for discussion. Dave, could we move to the first slide, please? Thank you. So as the chair had mentioned, in December, the IPSASB did engage in some very detailed discussions regarding the presentation of revenue and expense items, specifically those in surplus or deficit on the Statement of Financial Performance, and also revenue and expenses outside of surplus or deficit currently in the Statement of Changes in Net Assets Equity. So at that time, members engaged in a lot of great discussions considering benefits and drawbacks of various approaches. And for me as staff coming out of that session, it really highlighted that these are complex and challenging topics on this project for us to navigate through. And so to help us move this forward, the intention was that for Q1, we would put all of the arguments that were discussed in December into a first version of the draft CP, conduct some specific additional analysis requested by the board, then one in particular to test public sector specific examples on the set of categorization discussion. And that was an area where the task force was incredibly helpful for us as well. So what you've seen in this week's material for agenda item 11 is really building on those discussions. We tried not to repeat too much of existing analysis to reassert points, but really to help build out what we've already discussed and accomplished over the past while. And so what we want to do today, as the chair noted, was to really walk you through the materials. I'm going to start by presenting the findings of the additional research to help with thinking about what we see in the consultation paper, how we want to evolve it, and potentially what preliminary views that the board would like to land on today. We're also looking for your feedback to confirm that the detail and the color of the discussion that came through in December is being reflected appropriately. And as David mentioned, we did engage the task force to help us do that check in the first round before it came to the board here. Now, as mentioned, this consultation paper, Chapter 4 and Chapter 5 that you've seen is a starting point. It is a first draft. Right now, you'll see that it does portray both approaches in both chapters in I would say a more balanced way, but depending on how the IPSASB presents its final preliminary view in today's meeting, that will of course influence what parts of the CP chapters, the structure, and where we maybe need to add a little bit more meat or slightly revise the way we're presenting the arguments. That's all work that we'll make sure to do in Q2 and bring back a revised version to you in June for your final review. So with that, I'll take a quick pause if there's any questions about the purpose of today's session, as it does inform how we're going to handle Q2 as well, before I jump into the very first agenda item.
Thanks, Eileen. So just checking whether there are any questions or comments in terms of that overall approach. And again, just to echo the thanks in terms of the input from the task force members on the drafting. No, not seeing any flags raised, although I can't see online at the moment. So somebody will have to tell me if there's anybody raises their hands online. Okay.
I'm not seeing any hands online, Chair. But...
Okay, you can see online, can you? Okay. Right.
Yeah, I can try to keep an eye on it.
Okay. Right. Okay. So I think if you want to move us on, then thanks, Eileen.
Thank you, Chair. Dave, next slide, please. Thank you. So the first item today is continuing the discussion on categorizing revenue and expenses on the statement of financial performance. And that's a really key source of financial information for the users of financial statements. Now, in December, the IPSASB had decided that conceptually categorization does have benefits for financial statement users, as it adds more structure and can help users better understand, analyze, and compare financial performance information, addressing some of the diversity that they've noted exists in practice that is not helpful. However, practically, the board did feel that further analysis was needed to consider whether or not the categories as they are in IFRS 18, specifically the three new categories of operating, investing, and financing, could that actually be useful and feasible for the public sector? So the IPSASB had identified three common types of public sector entities that exist in most jurisdictions. So of course, government bodies at various levels, healthcare providers, and educational institutions. And these were to serve as examples for staff and the task force to then consider how we could practically introduce categories into IPSAS. So with the task force support, we were able to source over 30 examples, including whole of government statements, municipalities, education institutions at different types of levels and versions, and as well as healthcare, so hospitals. And so staff analyzed all of the examples, and we did find that we were able to classify the revenue and expenses into categories that were aligned with the IFRS 18 categories based on their guidance and their requirements with reasonable certainty and of course some assumptions based on what information was actually publicly available in those statements and the accompanying note disclosures. And so this really helped to confirm the December analysis that the IPSASB had discussed, which highlighted that the revenue and expense transactions that would be in these categories and the IPSAS guidance that would be applicable to those transactions were actually aligned between the private sector and the public sector. So all in all, it seemed that using IFRS 18 categories could actually achieve the intended benefits of categorization that the IPSASB had noted in its discussions in December. I won't go too much more into detail about the results of that, but you'll find the details in Appendix 1, as well as 3 examples that we've sort of illustrated by taking the public sector statements that we've seen, one from each of those groupings, and how we were able to categorize it into operating, investing, financing, if we were to apply the related guidance. Now, the second element was about whether there were potentially any public sector specific categories that were not IFRS 18 categories that we could consider. So in December, there were a few members that asked whether we could potentially identify a different set that's standardized and acknowledging that any alternative set of categories would need to still offer the comparability and clarity while balancing a very diverse set of user needs in the public sector. So some of the ideas were proposed in session. We also considered a few other ideas offline throughout the first quarter. And at this stage, we have not yet been able to identify like an alternative set that's not operating, investing, financing, that is still conceptually sound, that we're able to clearly define and could be a practical alternative in that sense. So we provided more details about that analysis and some of the ideas of other public sector specific categorizations in Appendix 2, some of which are adaptations essentially of the IFRS 18 category. Now, the two things I do want to highlight from the analysis to support the discussions today is just that with attempting to find a alternate set of categories, there were two overarching challenges that we were noting between staff and task force chair discussions. The first being that it is very difficult to identify and define a different but equally broad set of categories. We noted that part of this challenge is related to the fact that there is such a wide range of public sector entities in their service delivery objectives, their primary users, and their information needs across different sectors and jurisdictions. So it does become quite challenging and potentially really difficult to identify and receive international consensus on a different set of standardized categories that is sufficiently broad to be useful, relevant, and applicable for all public sector entities. Now, this actually echoed some of the challenges with the discussions we've had, but also from the ISB side, we did have some touch points with the ISB in asking about this project and how they came to these categorizations. And the ISB staff also shared that they faced similar challenges in trying to figure out what set of broad categories would work internationally. And they ultimately agreed that operating, investing, financing as the set of categories was well received and considered fundamental and well understood. Now, the second overarching challenge was potential confusions and wider implications that may arise if we try to revise the IFRS 18 categories by adapting them in some way. So some of the ideas that had been proposed that we were considering was operating, non-operating, or operating, investing, finance in a combination, or creating slightly different delineation in operating items and combining other pieces. So while that might fit us more in terms of telling the public sector narrative, it may cause more confusion and actually reduce the comparability that we are intending to achieve. Dave, next slide, please. Thank you. We won't spend too long on this slide. This is just one of the examples that was presented in the paper and in draft chapter 4 that showed how we looked at the current public sector statement and how we were trying to map it essentially and classify it into these categories as if it were IFRS 18 aligned. And this is just meant to show you what that looks like. And we thought if we do come up with a public sector specific set of categories, we would do the same exercise for a set of examples so that we can better illustrate for a reader of the consultation paper to understand what we mean about categorization in a certain way. Thank you. Next slide. This will be a quick one. So the second part of this paper was really presenting what we've done with the draft chapter 4. And this is really a direct result of the IPSASB's instructions for staff from December. The current drafting essentially proposes text to be added to the master consultation paper, if you will, that provides relevant background about the presentation of revenue and expenses on the statement, IPSASB's views on the conceptual benefits of categorization as discussed in December. There is now additional text as well about considering financial statement user needs across the international public sector. And lastly, 2 potential approaches that were identified by the board, which was either to align with IFRS 18 categories or come up with public sector specific categories with benefits and drawbacks of each. This is where we really try to make sure that the diversity of views and concerns that were shared by members is reflected in this section to make sure that we have a balanced version of the CP to bring to you today for further deliberation and refinement. Now, in creating this chapter, we also made sure to incorporate relevant guidance from the conceptual framework. And as you can see, there are placeholders for the preliminary views, which of course also will influence some of the other components of the draft CP as we go along. Next slide, please, Dave. So what did all that analysis mean for us? Well, from reviewing the public sector examples that the task force helped us source, we were able to confirm that our understanding and past discussions about the diversity in practice that we were hearing from users and from constituents did seem to hold true, and introducing categories would add more structure, help reduce that diversity in reporting, and support the user needs. Now, we also were able to demonstrate that public sector revenue and expenses can be reasonably classified into categories in alignment with IFRS 18 and would likely achieve the intended benefits of categorization. Secondly, in considering the public sector categories that are not IFRS 18, we did note that there are definitely benefits in having a public sector specific set of categories, but there are some overarching challenges for us at this stage in trying to identify an alternative that's feasible, understandable, and sufficiently broad to balance the information needs of diverse groups of users in the public sector internationally that would receive international consensus. So we presented this material to the task force to also collect their views and get their feedback on whether the draft CP at this stage of the 2 approaches and the views are appropriately collecting and summarizing the member discussions from the past, and also to share their view on the preliminary view. 4 out of our 7 task force members did support using IFRS 18 categories, and it was seen to be the more practical approach to add more formal structure to the statement and help the public sector users better understand, analyze, and compare financial information. So based on the analysis and task force views, staff and the task force chair are proposing that the board agree to the preliminary view to require entities to present revenue and expenses on the statement in categories aligned with IFRS 18 and to take forward the draft chapter 4 as presented with revisions into the full consultation paper. With that, I'm going to pass it back to the chair to open for discussion. Thank you.
Okay, thanks, Eileen. I think that's a very good overview of all the activity that's gone on over the last quarter, and I think that provides a lot more colour, sort of following the board's discussions in December. So I think in terms of sort of organising this, what we'll do is just maybe take some general comments on where the analysis has got to. Then we'll go into having a look at the drafting, and then we'll sort of circle back at the end and discuss where board members actually are then overall. So to begin that, I'll just open up for comments on the analysis that staff has presented based on the work during the last quarter. I think you were more or less, I think Patricia was just microsecond ahead of Scott. So if you lead us off, and then Scott, and then Noyati.
Thank you. I have reflected about this material, and I think the main objective of the financial statement is make possible to evaluate whether the entity provides its services to constitute an effectivity and efficiency and effectivity. I think this is the main objective to connect with the conceptual framework. And when I try to connect the financial information and the non-financial information, because I can evaluate efficiency or effectivity with a connect financial and non-financial information. Not that it include this in the financial statement, but the financial statement should allow me to do this. This is my point. And I think it's not so, in the paper, it seems easy to classify in operating, financing, and investing. My view, it's not so easy. In my view, it's not so easy because the conceptual framework established two different sets of assets. Assets dedicated to handling service and assets held for financial capacity. And I think you need to analyze I need that deep analysis about these different types of assets and liabilities related with these different type of assets. Can I try to explain my view? Assets held for operational capacity and consequently for handling services is typical for the activities that entities perform. And it's easy to connect with operating, but assets held for financial capacity, no, it's not in the same way. For example, if I try to connect the indicators related to services, educational services, I could not consider, for example, the revenue, the results about some kinds of, for example, if I have a financial instrument is for financial capacity, and if I have expense with this financial instrument is it's financing or is investing, not finance, is investing, is not operating. And then I think you need to indicate more clearly how to connect these different type of assets and different changes in the assets, liabilities, and consequently the classification in financial statement. Because financial statement is about changes in assets and liabilities. Yeah, this is my question. It needs to deep analysis about this. And the other point that I think you need considering better is there are some specific transactions in public sector. And for example, capital transfer. Capital transfers is considering operating or financing. And because the transfer is typical for public sector, but it's not necessarily is operating. This is, for example, there's some question that I have with cash flows statement. And I think you need to indicate more clearly what mean to classify as operating, as financing, as investing, and connect with our conceptual framework in terms of objectives, in terms of the specificity, especially related to the definition of assets. Thank you.
Thanks, Patricia. So what I'm going to do is I'll just walk around and get comments and see where members are. So I've got Scott next and then Noyat.
Thank you. I may just be asking a clarification question. When I was reading the classifications, what I did, and maybe it's in there, I missed it, was there was a kind of a third option here, and that is publicizing the three categories. In other words, it wasn't clear to me whether you're going to use the IFRS 18 definition for those categories, or could we add a public sector flavor to the categories? And I particularly was looking at higher ed because that's where I exist, and I was thinking about, I didn't necessarily disagree with the way that was there, but it is an opportunity to help our preparers understand what goes in those categories from a public sector lens. And that didn't come out in the paper. I didn't know if that was something yet to come down the road. What also is not in the paper, which we also know, is a series of footnotes that go with this. It gives us an opportunity to help educate our readers about what is in those categories. So I don't think we ought to assume those categories stand by themselves, because they don't. There's some disclosures that go with that. So I didn't know if that was contemplated here or not, but I assumed it was, but I just wanted clarity on that.
Thanks, Scott. So I think what you're sort of advocating there, in a sense, is consistent with the rules of the road, which is actually, you know, you look at the IFRS literature and then see if further interpretation or guidance is needed to apply the concepts in the public sector. Do we then need to adapt them if that doesn't work, or do we need to sort of do something totally specific? And I think that's so. You know, I think you could quite easily see that kind of adding in a particular interpretation, and that might go some way, for example, to addressing, you know, Patricia's point about transfers. Where do those sit, for example? So I think, you know, that, I don't know, Eileen, if there's anything you want to add to that before I go to Noyati.
Yeah, I'd be happy to add in, just to let you know, since I'm keeping an eye on but I can definitely give a response first to Patricia and Scott's, because I think they are quite coupled together. Now, when we were categorizing the items in the examples that we saw in this quarter, we essentially kind of took the information we've seen from IFRS 18 as almost our guideline, as if we were a preparer trying to apply the guidance. And so I think the best reference in this moment would be the appendix from the December paper, which showcased how IFRS 18 actually asks a preparer to consider the revenues and expenses. So those that go into the investing and financing are a very specific set of income and expenses, and that income and expenses may be from assets or liabilities the entity already holds or might not. But investing and financing in particular are actually those income and expenses from assets that generate returns individually or largely independent from the entity's general activities. So that could be like your equity statements, investment properties, you know, depreciation, etc., or from cash and cash equivalents. And for financing, for example, those are the pure financing transactions. So if you have income or expenses, or like from your financing, so your bonds, your loans, any lease liabilities, pension liabilities, that would actually be what's considered financing. So in building out this approach, if we were to take IFRS 18 as the way forward, what the IED and eventually the ED and pronouncement would show is additional guidance within the AG's implementation guidance, illustrative examples, etc., to really bring in that public sector flavor in compliance with the rule of the road, to show that if we have, say, a capital transfer, how might you think about the nature and substance of this transaction to identify which of these categories it would go into. In some ways, the IFRS 18 categories are almost structured like if it's investing, yes, no, no, okay. How about financing? Yes, no, no, okay. So it's actually then defaulted into operating. So operating is almost a catch-all, but it is expected to be a large sum of the revenue and expenses that are in here. And it differs from the cash flow, and it was intentionally different from the cash flow. And so that was something that the ISB reflected on as well. And we did have a short discussion about that in the December session. Now, in terms of operating capacity and financing capacity, we did have a discussion about that internally as well, and we felt it wasn't necessarily a broader approach on the public sector side that we can put to all revenue and expenses here, as it was a concept that was originally created on the measurement side, specific to the use of assets. And right now, revenue and expenses may not only be coming from assets. So it was important for us to find something a bit broader that would work in that sense. So I think I've covered the questions so far, but please let me know if I've missed anything or misunderstood an inquiry. Otherwise, happy to proceed with Nuryati and Yakuba's questions as well.
I think, Tricia, you want to come back briefly on that.
Thank you. I think because I have so relevant differences in relation to the our conceptual framework, I think you need to understand better, in fact, what kind of revenue and expense is financing or investing. Because not all, it's not in the same line with IFRS requirement. This is my question. For example, I will try in the consolidated financial statement, how to consider the revenue and expenses related to the company that the government control. Because it's not a specific activity developed by public sector. Is the way, if the investment is for, depends on how why this investment was made. It's not so directly, it's not so easy to classify. I think it's possible, but you need to present more explanation in the consultation and indicate in the areas that it's not so easy to do this. I think some areas is easy. For example, tax, revenue from tax. I think, okay, it's operational, but other areas is not so easy.
Okay, thanks, Patricia. And I think, so I just want to get some more comments from other members. So I've got Nuryati, then Yakuba online, then Mari, then Angela. But I think in thinking about this, you know, I mean, I think, Patricia, you've given us some very specific examples, and I think that's what we need from members at this stage. You know, in terms of if we are to proceed with you know, some sort of public sector alternative, I think having thought about it, what we're looking for is specific suggestions rather than an instruction to staff to just go away and have another think about it. So I think Patricia's given a specific challenge there. So if I can go to other members, then Nuryati and then Yakuba.
Thank you, Chair. Actually, in my opinion, I think I don't have an issue of categorizing them as such, but the thing is how to differentiate. Just exactly what Patricia told us, and beside that, in a practical implementation, actually, is there any redundancy between the project IPSAS 24, which is presentation of budget information, which somehow we have to reconcile with the cash flow because of we want to reconcile between the financial position and the budget itself. So, and then another thing is if we do it like the IFRS 18, the presentation of the financial performance also will resemble the structure of cash flow statement and budget information in the financial statement. So there would be 3 statements which actually follow the requirement of cash flow. And then these 3 statements will have a different outcome. So might be call it might be the user will get confused of that. Maybe that's Ellen said that you have saying that there's a difference between cash flow and this one. Maybe that's one of the thing that maybe have to be more clearer about that, the difference between that. In Malaysia, actually, our financial financial performance, actually, we do the console with the trust fund and public fund because we're still using the fund accounting. So how we categorize that into these 3 categories, because there's a lot of transfers, as what Patricia said, between the fund and then between even the financing as well as investment. So maybe and we suggest that is it possible that it is not mandatory to the jurisdiction to follow exactly IFRS 18 as to fulfill the requirement of our own jurisdiction. It's not mandatory because we have, that's the one. Thank you.
Thanks, Noyati. I mean, quite a number of points there. I think probably in moving the discussion forward, I think we should take it as read that if you went with, well, whatever categorization you go with, whether it's the IFRS 18 or a public sector categorization, there would need to be more guidance about what goes in each of the categories. I think we just, I think we just have that as a working assumption that there would need to be that. I think we, in the scope of the project, what we have taken the decision is that cash flow and budget are outside. We know that the ISB is reviewing its cash flow statement guidance, and clearly, questions around how they use the 3 terms there versus that's going to be something that we need to wait and see on, because I agree with you, it's confusing if you have different definitions, etc. So let's see where they get to on that. And clearly budget is a jurisdictional specific thing, so what's in IPSAS 24 gives you some principles, but again, that's not within the scope of this project. So I think, yes, I agree with you. There are concerns if you don't have the same definitions, but I think that's not for this project. And some of that would be a jurisdictional specific issue. And then I think there is something that maybe just needs a bit of exploration, which is actually the point, in a way, it's the point that Patricia was raising, which is actually, do you do subcategorization in terms of different types of activities within your performance statement, or actually do you use segmental reporting? And I think that may be something that perhaps needs a little bit more exploration. So thanks, Noyati. A lot of things to consider. So if I go to Yakuba next, and then I've got Mary, and then Angela, and then Andrew.
Thank you, Chair. My question is related to this disclaimer in the paper. I just want to know if a change in that the assumption reported, a change in the assumption can change dramatically the outcome of the analysis. because some of the categorization seems to be based on the analysis made on the financial statement provided. So I would just like to know if the assumption made, if there is a change in the those assumptions that can change dramatically the outcome of the analysis. Thank you.
Thanks, Yakuba. Eileen, any thoughts on that?
Thank you, Ian. So for Yakuba, your question on the assumptions, I would say no. When I mean assumptions, it's basically if I look at a financial statement line item on the financial statements, and I look at the accompanying notes related to that number, can I or can I not figure out every revenue and expense item that went into those lines? So for example, other revenue might include 20, 50 items, but the statements and the notes themselves may not list everything out. So they're really focusing on, of course, the most material information. So at that stage, if I'm categorizing other revenue into operating or investing or financing, it's essentially based on what information do I have? Is it really only going to get categorized and moved in this way? Or is there other information in there that might be immaterial for their note disclosure and information purposes that might influence the specific category it might go into? But I would say, would that have changed our conclusion that IFRS 18 categories is possible, is feasible, and can provide that benefit? I would say no, it didn't give us that impression. Now, I know Ian's already responded to Noriadi's point, but one thing I did want to highlight just about Patricia's earlier note on, thinking about these examples. I think the examples are definitely very crucial for us when we're building out the IED to really showcase that if we take the guidance that we have seen in IFRS 18, and we had a quick overview about it in December, what do we need to add on there to showcase that if you have these types of public sector transactions, how could you potentially classify that into one of these three categories? So the example that was provided, you can see that if a government has full control over this entity, well, under the IFRS 18 requirements, that would actually be investing. There's actually a very clear paragraph in there indicating that any income and expenses from that type of investment would actually be investing. Now, I think one of the challenges that comes through with the discussions so far in trying to think through this example is that we might be thinking about it too much from the cash flow perspective, where you've got the inflows and outflows of how you are not investing in it. Whereas on the statement of financial performance, it's really focusing on what is the overall nature and substance of that income or expense. Where is it being sourced from? So there's very clear guidance in IFRS 18 that we can then build upon to bring in more of that public sector flavor to really help public sector users actually apply this.
Thanks, Eileen. So I'm going to move on then to Mary.
Yes, thank you. Thank you. And I understand so many crucial issues exist in this alignment with the IFRS 18, and so it is important to start from the recognition of what is the financial performance in the public sector and the private sector. And so the financial performance, the definition of the financial performance is so important based on the difference between the private sector and public sector, and it is a current service delivery and the future service delivery is so important in the public sector. And so the objectives of investing and financing in the public sector are quite different from the private sector's objectives that are directly related to the profit generation for the shareholder and future investors. And so compared with the service delivery objectives in the public sector for the current and future generations. And however, I think it is important to align a possibility to align with IFRS 18 because in the viewpoint of public financial management, and it means the accountability and decision making and responsible decision making and management are required, and it is so important necessity to structure the responsibility accounting in the public sector. It is maybe the definition of the financing and investment for the future service delivery. And so there exist complex issues in the alignment with the IFRS 18 in IPSAS. Thank you.
Thanks, Mary. I think Yakuba wanted to come back briefly.
Yes, thank you, Chair. If we, there is no impact, there is no, excuse me. So if there is no impact expected from a change in the assumption, I do think maybe we need to mention that as a short paragraph where disclaimer is put in the analysis. This is what I would like to add.
Okay, so I think, you know, what we need to separate out here is the principle that you can use the categories in IFRS 18 and add additional guidance, or are there other categories? You know, we can, you know, there will at this stage we're talking principles, we're not talking detail, and I think that's the level at which we've got to have the debate is, do we accept that you could use the categories in IFRS 18 and provide additional guidance about what goes in them? Or is there something, are there other category headings that are required specifically because of the public sector? Or do we call, you know, I mean, you could call the category headings something different. You could call operating service delivery, because that's more meaningful for the public sector. So I think it's at that level that we need to consider. Then there will be more detailed guidance, and it may well be that if you're looking at, say, schools within a jurisdiction, that the schools authority actually says, we want you to show this type of transaction under this heading, you know. So I think that probably goes to sort of, you know, because quite commonly you want comparability. So you would say schools show pupil, you know, income here, expenditure on this here, to get that comparability. But that doesn't necessarily mean you can't use the headings. So I think if we can keep focused on, can we use these high-level categorizations with appropriate guidance, or do we need something different? So I'm going to go to Angela, then Andrew, then Claudia.
Thank you, Chair, and thank you, Eileen, for the papers, and actually to the members for this discussion. But I'm coming from probably stepping right back. I'm observing and reflecting where we've got to on the project and the purpose of a consultation paper. And I guess my reflection is when we incorporate the other chapters on the balance sheet and incorporate chapter 4 as written, it very much, from an external perspective, and actually just from my own observation, I feel it's very much, it feels like an IFRS alignment project as it's currently drafted. And I think
Sorry, Angela, it is. We've approached it as IFRS alignment because that's what our processes tell us. So it is an alignment project.
I haven't quite finished, sorry, but I agree it is an IFRS alignment project. And I was just saying that a number of the board members have raised how much should the rules of the road, public sector differences be reflected in a consultation paper to test ideas. But I guess the question is, if it's an IFRS alignment project, I am starting to wonder the purpose of a consultation paper. And I wanted to check, so it's a clarity thing. I'm forming my views, but I can easily see, is the purpose of a consultation paper, this one, the rules of the road could be so interesting and challenging as people have talked, is the purpose of the consultation paper to ask constituents or to test our thinking on the broad principles of the rules of the road. So that's kind of one idea. The second thought, or I was unsure, was the public sector is in an environment where statistics is important, COFOG is important, potentially segment reporting, potentially management consultation. So the context in which financial statements of public sector appear and their connections to other frameworks is very important to our constituents. So again, just seeking clarity. We've often talked about supplementary material in previous discussions, but we've never gone much further than just mention them. So again, I'm asking myself, is our intention not only to talk about the IFRS alignment and what that might mean in a consultation paper, but are we also looking to ask constituents about those connections with other frameworks? And do we encourage COFOG supplementary disclosures on, and I think nature and function discussions, I'm not sure, it's unclear when they're coming or if they're coming. So that's an area. And then I guess the third area, which is, as I can see, it's very challenging, is because it's a consultation paper. Was there an expectation, or do constituents have an expectation at the beginning of the project for us to have created a public sector classification using our conceptual framework? So it's a hard thing to come up with, but again, I'm just seeking clarity about the sections of this consultation paper and which ones we intend to explore or seek feedback.
Ross.
So I don't have a comment for a lot of what you asked, but you did say one thing that I did want to just remind the board on. It came up in a couple of different points where I've heard people say, what's performance in the public sector? And there's a reason why that's not in the conceptual framework. So the conceptual framework does have a chapter on presentation and disclosure, but doesn't define clearly what performance is in the public sector. That's not because the board didn't try. So when the framework was being developed, there was a vigorous debate. And one of the leaders of that was Ken, who you know very well, trying to define what performance is in the public sector for this exact purpose. And they weren't able to land on anything. That's why it's more open and I would say higher level in the guidance on presentation and disclosure. So I would caution the board on going down a route of trying to develop a very clear view on what performance is in the public sector, because some of you are coming from a background where you work in central government. Some are coming from state or local government. Some have, we have users of our standards who are quasi-government. So I think you're really going to struggle on that. And I don't know if that's going to be helpful, but the questions we need to focus on is, it is a CP, is what do constituents need? What is the objective of the various chapters? What are the questions we need so we can finalize a standard down the road? So it needs to be a little higher level and a little less specific from what I'm hearing. And kind of feels some of the comments we're talking about what would be in a final ED and what we need in a final principle, but we're still at what's the problem we're trying to solve in each chapter, what needs to be in there in terms of the narrative so that people can actually give us useful information that will actually help with the finalization of the proposals in the ED. And the IED is a tool to help pull that out. It's not going to be the final ED. So I just want to make those points because I do kind of like a little bit of deja vu. I have kind of seen this discussion before when I was very new to the staff at the beginning of my career, and it put a really strong impression on me on how hard that was. And there were 3 really big issues, I think, in finalizing the framework, and that was one of them.
So to your point about consultation papers, there is no, there is nothing that says what should be in a consultation paper. The reason why we decided to go for a consultation paper and an illustrative exposure draft are precisely because we knew that the area that we're in at the moment in terms of what is financial performance and what do you do with the other gains and losses was going to be difficult. And so therefore it wasn't appropriate just to leap immediately to doing an exposure draft, because you're right. I mean, if it's a relatively, if the alignment is relatively simple and obvious, then you can go to an exposure draft first off. But we knew that this was going to be an important area, and therefore the idea was that the board would explore the kinds of issues, just exactly the kinds of issues that we're discussing at the moment, where that was necessary. I think the balance sheet discussion we've had was relatively clear cut from the board's point of view, and therefore it's clear that we could have PVs on that. I think this is more fundamental in the discussion that we're having, which is exactly why for this area, and if you look at the sort of other revenues and expenses, why we're having that discussion there. And then, as we'll come back to later, I think there are some tactics here in terms of how do we present it in order to elicit the responses from our constituents. So I think it's actually our opportunity as a board to present our thinking. And I think, we can't second guess what our constituents will be thinking. So it's basically what are we thinking? And we are testing at the moment and kind of quite deliberately being, tough with the board in terms of saying, look, if you don't think that IFRS 18 categories with some appropriate explanation work, what is it that you think is required? Because if we don't present that thinking, and if we don't give it to our constituents so that they can go, yes, we agree with that, we want more guidance on financing and how it works in the public sector, or no, we don't think the operating heading works, we think service delivery is more meaningful, for example, we're not going to get anywhere at the next stage. So there's a balance to be struck, if that makes sense. So sorry, I jumped in earlier.
No, there was a very helpful clarification. I think what I just wanted to check, and again, it's about clarity. You mentioned OCI versus net assets equity is a big issue and one of the drivers for going to a consultation paper. So we have, it's great, we have chapter 5 on that. So that's one reason. I think I'm hearing at the right level to also test the ability to take IFRS 18 and align it in the public sector in the consultation paper at enough sort of principle discussions around what will our constituents think of that, with enough level of granularity to get feedback, but not, although we are having an illustrative ED, so we're giving the constituents a lot of material. So I can understand a sort of an alignment project with consultation paper and illustrative ED allows us just to be a little bit more testing of the alignment ability. I guess I'm just interested in whether the consultation paper should also be more than that. And that's the clarity I probably have been missing for a little while. But it's really helpful to understand where you're thinking on that.
Well, I think it's where the board's thinking is, because that's what was encapsulated in the approach that we're taking to it, and it's in the project brief. And actually, if you go much broader, then you actually end up, it's back to Ross's point, that we're ending up back in the conceptual framework. So I think, that's where, if you like, you take Patricia's point, which is actually we've got concepts in terms of assets held for service performance and assets held for, assets held for operating and financial capacity. So actually, can you introduce headings? Should you introduce headings? And that's very different from really taking a step right back. And I think, constituents are open to provide comments on how they see these ideas, playing out. But I think that's, if you go right back, then you're not going to get any meaningful feedback, frankly, because you're not, so we've already been through the conceptual framework. I think we're now saying, we follow our processes, which is rules of the road. That's why we're applying rules of the road in terms of IFRS 18, but recognizing that that potentially raises some very specific issues. And we know that, it's time that we actually exposed the issues about, what sits in the statement of financial performance, what sits in whatever we call it, and not starting necessarily from OCI because of, but that's the point that we'll come to. So I think, that's the context, if you like, as to why we're moving forward in this way. So I've got Andrew, then Claudia, then Mike, then Abdullah.
Thanks. So I think in terms of the drafting of the CP or the analysis where we are at the moment, there's a heavy focus on consistency of presentation at the moment. And I think that maybe is adding to the confusion of, well, what categories? Is it, the three we've got in IFRS 18? Is it different categories? I mean, if consistency is your aim, it doesn't matter what the categories are, you can get consistency. I think the analysis or the drafting in the CP, what it's missing is how do these categories, whatever they may be, IFRS 18 or a public sector, how do they actually support the decisions that users need to make? How do they actually underlie the usefulness and the relevance of the information that's presented? And I think we're missing that analysis at the moment for both the IFRS 18 categories and any public sector categories, whatever they may or may not be. And I think if we can get down to that level of explanation in the CP to really explain why we as a board feel this categorization criteria increases the relevance and the usefulness, not just consistency. And I'm using the word consistency on purpose because the framework talks to comparability, but I think we've currently looked at consistency of information. Then I think that also, will help constituents in responding back and saying, well, we actually think, yes, this split of information would result in information that is more relevant and is more useful. So I think that's sort of an overarching comment across both options that we've got. In that same vein, I think what we've currently got in terms of the public sector categories is we have looked at some, validly so, but I think we should be explaining that to users or in the consultation paper to say, we've looked at the various options that Eileen has highlighted. And for these reasons, we don't think that they would produce relevant and useful information, in a public sector set of financial statements. Because then when constituents read this, they can go and say, oh, well, all right, the board has thought about it, and this is the reasons. Do I agree? Don't I agree? Whereas if we don't put that thinking in, we risk people coming back and saying, well, have you looked at financial operating capacity? Have you looked at, the different splits that we've potentially be sorting? And that's not really useful feedback at that stage because we've already looked at it and kind of written it off. So I think we just need to include that as well. My last comment is sort of just also hearing around the table is I also do think that this nature versus function discussion is very much linked in terms of providing the usefulness of the categories that we potentially have. Because, Ian, you've been saying, do we need subcategories? Don't we need subcategories? I think that depends on how we classify or present the information within these categories. So is it nature function? Is it COFOG? Do we look at GFS type alignment there as well? I think that will also help us in making a case for, whichever categorization options we put forward, are they actually going to produce useful information or not? Thanks.
I'm not sure where this COFOG is going because COFOG is segmental reporting. It's not either functional or nature. So I think let's just take COFOG out of this because you can use COFOG through our segment reporting standard at the moment. I think the nature versus function, I'm not cited on where ISB got on that. Again, I think there are some questions there, and they may be different between organisations. So I don't know. I'm just looking at staff about where we would pick up nature versus function.
Thanks, Chair. Yeah, I apologize on my end. We did include it in the paper that we will be tackling that as a next piece, but I may not have made that clear enough in the paper. But nature versus function is something that we will need to consider after we had decided on the categories, because ultimately that is what then fits into each of these categories. Now, in terms of nature or function, or if there's an option, the ISB also discusses that as well. So we will be bringing a paper in June to showcase more information about that. The only thing I would add, if it can give some members some comfort as well, is this discussion is actually what we were really hoping for to help us get permission, if you will, to make the CP a little bit more comprehensive. One of the challenges that staff had this quarter in writing it is trying to perhaps mirror the existing chapters that have been written on this project prior to this, which were definitely more short and succinct. And I think it's because the discussions as well were quite clear cut. Whereas here on this statement and in our discussions on revenue and expenses on the statement, it's definitely become much more of a challenging area where we do want to explore more of these options. And so, the points that Andrew brought up, I think are things that will really help add more flavor to these options and provide constituents a better ability to really give us feedback on them. So that's something that we can definitely take away and do. But it's great to hear that that is where the board would like to go so that we can build that more robust chapter.
Well, I think let's just agree that COFOG is something that is related to segment reporting. It's not an issue as far as the performance statement is concerned. I think clearly we do need nature versus function as important. So we'll see a paper back on that next time. So then, I mean, clearly then the request in terms of tying this better into decision making. And I think that's something, Andrew, where I think, specific request is, can you help with that drafting? Because I think that's something where there probably would be more specific, there's some specific issues that obviously you have in mind on that. And then the other point that you made was...
It was consistency of the drafting, presenting, I think, all of the public sector categories we have had a look at to make sure people see what's that's in. The linkage with nature versus function, then I think that was it.
I think we'll need to think about that, because otherwise you just, again, it's about how does this information get organized in a way that doesn't mean that we just get a complete, I think we have to take some views as a board to shape it. So, in a sense, actually, if, there is a view that we present a public sector alternative, which would be fine, I think we have to have an alternative, because if you say, well, it could be this, it could be this, it could be this, we're not going to get anything back that's useful. Andrew, back on that.
Sorry, just to clarify, I agree. We should have an alternative, or even if we say no public sector specific alternative works, and therefore we do propose 18, we need to go through the full thinking of how we've got to that conclusion. To me, that's what's currently missing. So what were the options we considered and why we decided against them?
Okay, but there's also a question about length as well. So I think, we need to outline the sort of process, but you do have to be careful about length on the CP, because we've had that in the past, actually, that if we write a very, very long CP, we won't get, people will just get confused about where we're going. So I think there's a tension here, in a sense, if they want to see more about the detail, then they actually need to see the board papers. So there's a kind of, the board papers can be long, but the CP needs to actually be reasonably short in terms of, here's maybe what we've considered, but here's where, what we think the alternatives are. And then they can comment, but we need to make it accessible. So, I think that's the challenge is, what do we put in, what do we leave out in order to give some clarity about where our thinking's got to. And, we have had that before. We've written very long CPs. It just means people don't understand what we're talking about. Okay, so I'm going to go to Claudia next, and then Mike, and then Abdullah.
Thank you. Following the discussion, I have an addition to to IFRS alignment. One of the major concepts which is linked to the classification in the IFRS is the main business activities. And we should really mention in the description this concept. Main business activities means it helps if I have operating, investing, or financing. That means if I'm, for example, someone who granting concessionary loans, then it's operating and it's not investing. And I think that's what it's actually about. The pure using operating, investing, and financing is totally missing. There's a linked concept which help to classification. And I think we should at least mention this concept because this main business activities have to be explained then for the public sector context, what it means. And secondly, yeah, I'm sorry, I was just a little bit inspired by our colleagues from IMF. We have talked the whole week a lot of GFS. So I remember we had a public sector categorization for the statement of financial position, where we have a look if GFS, a possible option for the balance sheet presentation, and we come to the conclusion it's not. But we should test the public sector categorization of GFS if that could be an option for the categorization of the statement of financial performance. Especially GFS is internationally recognized, is tailored for public sector. And there exists, for example, a category that called redistribution, which includes social benefits, transferred grants. So maybe that's could be an option for another classification or a mix of both for presenting and helping user. Like Andrew said, we need for users' decision, the primary users' decision that they can. So I would have to include it in our CP. Maybe if we come to the conclusion GFS is workable or it's not workable, we need maybe the same decision like we have for the statement of financial position done.
Thanks, Heidi. So, I mean, listening to a number of interventions, it seems to me, and this perhaps goes back to what Patricia was saying, is in a sense, actually, we need something that gives a bit of a flavour of what public sector activities, what are the key types of public sector activities, and this may well be perhaps tomorrow's point in terms of service delivery. It may well be that others are held for, you know, and it's the sort of a bit about the what's in the conceptual framework on operating and financing, because if we actually lift it up in that way, actually then that allows you to actually have, I think, the comparative discussion that members are actually looking for, because it actually gives you a sense of, okay, then going into this, alignment would tell us, okay, do we test IFRS 18 categories and provide additional interpretation? Or is there some other public sector? Are there some public sector headings which we think we should use, or should we use the GFS categorization? And maybe that gives you three alternatives. Three's never as good as two, but at least it gives you. But I think if we actually set it in the context, and whether it's in this chapter or whether it's earlier up about some of the specific, if you like, the things that actually maybe this actually. Sorry, I'm thinking on my feet, but actually some of this comes out of the preface to the conceptual framework. And that may be helpful to have that, because then it gives you some locus for the board thinking in terms of how do we approach this, rather than just, I like this heading, I don't like that heading. Actually, it gives you something that actually allows you to spring off. And then I think then that gives you maybe, okay, perhaps we have three alternatives, which is IFRS aligned, GFS aligned, or something totally different, and we can have some pros and cons against that. And so that does give you, if you're looking then at constituents, it actually gives them something to bounce off, and it would give a more principled approach to where the board is going to go on this, rather than just, I like this, I don't like that. I'll leave you to think about that, but thanks for that intervention, Claudia. I'll go to Mike, then Abdullah, then Karen.
So thank you, Chair. So having listened to the argument, starting from December, even the reporting back from the breakout and what I heard so far here, I just to give you a quick answer on that. Here is my understanding. It would really confirm also what Ross said. We have that broad range, which ranges from more public sector like private company style to ministries. We have that international organization aside, all with their individual understanding of performance, accountability, and so on. I think what is a little bit here, what we're a little bit losing is that issue of standardization, because I think it's very high good, even when it comes to the structure of revenue and expenses. And therefore, in terms of tactical speaking, I really in favor of going ahead with that PV. It is not set in stone. It's a PV. Constituents can comment whatever they want on that. And of course, further explanation, guidance, and reconciliation to some certain types of public sector entities there. So I would also in favor of. Thank you.
Thanks, Mike. Let's go to Abdullah next, and then Karen.
Thank you, Chairman. And when I was looking into the papers, I thought this one would be the paper that we would have most comments about them. But looking at it and listening to what Ross was mentioning about the conceptual framework, and when we intentionally, or the board intentionally didn't have anything specific to describe or define the performance statement or the categorize in there, I guess that was logical, and I think in here we want to be agile, pragmatic, and we want to keep on to the messaging that we've been having. What I mean by that is saying, as one of our strategy, one of the pillars is saying to align with IFRS, and the recommendation is working on that, which is to align with IFRS 18. So this is being consistent with our messaging. We might want to add bases on why we are thinking the three categories or whatever categories there are relevant to the public sector. And in the same time, I would be against to say that we want to have an alternative view to align with GFS. Yes, GFS is important, but we've been hearing a lot about automation, AI, and I guess the alignment with GFS or whatever entity could work on that through AI or automation or whatever reporting. That would be a reporting alignment exercise, and rather than conceptual thing that we would want to have it as part of our literature, at least other than the alignment project that we're going to be working on. The missing part is it would be to the public sector specific nature, because public sector sometimes entities would be responsible to deliver something that is not their core. Sometimes that they would be labeled to run activities not through their own resources, not controlled resources. So those would be I would call them controllable, non-controllable items. That would be the other view that I would be looking at it, and how to report it from a public sector perspective. Do we want to have a different labeling for that? So those are my thoughts around this, and thank you.
Thanks, Abdullah. Useful. Karen.
Thank you, Chair. If I've got a big frown on my face, it's because I've been concentrating in terms of listening to what people have had to say on this topic, recognising that I'm joining partway through what has already been quite a significant journey. In trying to help bring myself up to speed, I kind of went back to what we were trying to do. I think, as Ian said, what's the problem we're trying to solve here? And I think there were a couple of things that have sprung out from that we've covered in part in the discussions so far. So I think one of the things that was in the project brief was about GFS alignment. So I think it's good that that has been raised, because I think in terms of satisfying our own brief, we need to be clear exactly why or why not we want to go ahead with a proposal on that. And hopefully not to muddy the waters, but to throw into the pot, of course, in Australia, there is a accounting standard 1049 that looks to try and harmonise accrual accounting with statistical information, and that might provide some categories that could be useful, maybe useful to explore. But I think it would be good to have some categorisation that is based on GFS as an option. I think, like you've said, Ian, I think having too many options is probably unhelpful. So that you don't end up with so many options, people don't know what to choose from, and you don't get meaningful feedback from it. But given the project brief had IFRS and GFS alignment in there, I think it's good to cover both of those off. The other perspective was around users, and as I went back, I can see that and I don't want to get into the discussion we had about materiality, but we seem to, in the material that I've read, say that the focus here is on the taxpayer and on elected representatives. And I think it would be useful for me to clarify that that is still the intent, because I think Eileen has mentioned today sort of confusion from stakeholders, and I'm not entirely clear what confusion we're talking about, because I suspect many of those users may be less familiar with IFRS. And so I think if we're using those words, we need to be really clear about that in terms of what user base we're talking about, and making sure that we're constantly framing it around those users that we have in mind. And to the other point that was raised in here about the fact that there are many different types of users, because there's many different kinds of public sector bodies, I think one example that might be useful to include in here is one that is at whole of government accounts level, because I think, one, it's much more complicated than an individual entity. So if you're testing the categories, it might be useful to illustrate that, and that may have different users to an individual public sector entity. So thank you.
Thanks, Karen. So I think, a couple of things come out of that. Certainly, if you go back to the preface to the conceptual framework, I think that's I think that's probably something that we should actually include as an annex in the CP, because actually it talks about in front of me. Basically, it does talk about essentially what is different about the public sector. And so it picks up volume and financial significance of non-exchange transactions. It picks up about the nature of public sector programs, longevity of the public sector. It picks up on the nature and purpose of assets and liabilities in the public sector. It picks up on the regulatory role, relationship to statistical reporting. So I think, that's already in our literature, and therefore we should pull it in. Also, to the point that you've just raised, Karen, I think it may be useful, again, just to remind people who the primary user groups actually are. So this is all thinking that the board has already done. And then I think that gives you the context for then the options. And broadly, I think there are three options based on the discussion. It's either IFRS aligned with interpretation, it's probably statistical reporting, or it's probably something else. And, again, I think we probably, from a point of view of getting useful input, actually, if we go wider than that, it's not going to give us useful input. But broadly, those three options so far, I think, would encompass all the options that I've heard listening to the discussion. But if we root it in the framework, that gives us a frame of reference then to do the evaluation that I think we're looking for here. Angela, back to you.
Thank you, Chair, and thank you to members, and particularly Karen for clarifying in my mind. And I've been on some of this journey, Karen, so thank you for succinctly bringing that together. And I thought that summary really helps me. As a member of the task force, I have a newfound appreciation for the staff on the clarity of instruction. So as a task force member, having to action some of this, I really do appreciate the confirmation. I guess I wanted to test in chapter 4, where we have required the use of a public sector specific categories, and we've now put some meat on the bone in terms of a GFS alignment presentation option, and I'm very supportive of that. I guess as a task force member, it's the something else I'm curious about, because I sensed in Eileen's introduction that she and we as a task force were actually struggling with something else. And in terms of we're quite a way down the project, so I would appreciate any clarity around what members mean by something else before we leave this week.
That's a very good challenge, Angela, and very dear to my heart, actually. Ross, I don't know whether you want to come in on that, because I think that does go back to that challenge to members, which is if you see something else, what is it? Ross.
So that's exactly where I wanted to go with it, because we have had breakout sessions on this a couple of times. Staff's compiled that. We've had discussions. There is a lot of noise around, well, we don't want like IFRS 18. Maybe we could do GFS but we'd like something else. But I have to be honest, I haven't really heard any suggestions on what that something else is. So I do think if we're going to have that bucket, we're going to have to come up with what that is, because I don't think it's fair to just say there's something else and send staff off to do a massive research project on this. And then it's going to be an endless cycle of, again, this takes you into what's performance in the public sector and why we don't have it in the framework today. So I think the board does need to be specific, and they do need to be clear on what they want explored in that something else bucket.
Angela, response to that, and then I'm going to Renee and Scott.
You just reminded me, Ross, that there were a number of breakout sessions over 14 months. I know a couple of them with technology I wasn't able to join in the most recent, but there seems to me there would have been a lot of generation of material and ideas, and it's David's shaking his head, but I guess in terms of genuinely testing whether there is something else, just from a due process perspective, is there anything from all of that breakout material that we should just, is there any commonality in that which creates something else? And again, it's just seeking clarity, so we can either explore something or rule it out at some stage.
Ross.
So I'm kind of jumping ahead of Eileen here. So if Eileen wants to put her flag up and say the opposite, my take from what we heard is there were no specific something else's. There were ideas, let's do more research, let's think about it, but no clear, this is something that needs to be explored. And I think this discussion probably, to me, has highlighted there is a lot around IFRS 18 and potentially statistics. I'm not sure about the something else. And when I've been involved in those discussions, the one I went in, the something else felt like the what's financial performance in the public sector discussion from the framework.
Dave, and then I'm going to Renee.
I just want to say very quickly that all the breakout sessions that you've had, staff summarizes those discussions for the board, so you've seen everything.
No. I mean, I think it's a good challenge, but I think it we haven't got anything concrete at the moment. Renee, and then Scott.
Yes, thank you. This is exactly the area in the issue paper that I had the most difficulty understanding, or that left me on my appetite. The paper is providing us information and insight on the fact that the task force tried to come up with other categories. Two challenges have been identified why it's difficult, right? So we can explain to constituents that we tried, that it's very challenging to come up with other categories, but there are categories that were proposed, and they are in Appendix 2, and I reviewed those proposed categories and reflected on whether they would be useful or not. And I see that in the illustrative exposure draft, staff was waiting on this conversation in order to bring those three potential categories into the illustrative, into the CP, the draft CP. So my original question of clarification was that, is that the best we've done, right? Is that this other public sector categorization of operating, investing, and funding? So that was my first question: is are we going ahead with this is our best attempt, right? And couching that into an analysis or a discussion on the fact that we tried and there are those key challenges. So that was my first question. Now, looking at those three categories, I find that they can introduce even more confusion because they're using the same terms to mean different things, right? And then there's the paragraph under ABC that says, that reconciles, that does the mapping between IFRS 18 categories and those three new proposed categories. And then I started trying to do the mapping in my mind and said, whoa, that demonstrates that it's probably not feasible to do it, but we've attempted to do it. So are we going to put that in the CP? Yes or no? If we are, I would do a much more visual table to demonstrate the mapping between the IFRS categories and those, because we will want constituent to react to that. And myself as a constituent reacting to these categories, I find it's adding more confusion, but we want them to be able to react and to understand. So I think putting them side by side and explaining how we're using the same terminology to mean something different, I think it's going to help drive the point that this has not been easy and this may not be helpful. So therefore, why our PV is maybe those IFRS 18 categories are the best. So I have first a question of clarification: are we going with this or not? And then if we are, I would welcome more explicit mapping.
Okay, thanks, Renee. I want to take Scott first, and then I want to just circle back with staff, I think.
My comment actually builds on what Renee just said and probably brings in a little bit of what Andrew said. I can give you another one, but I don't endorse it. And that is actually, if you look in paragraph 4.17, you talk about federal government, municipal, and hospital. So we could come out with specific categories by entity. Now, we know why that doesn't work, but I think that's what a lot of people are thinking. Okay, so coming back to what Nate is, I think we have two options, and we have an explanation why we don't have a third. Is I think where we need to go.
Eileen, back to you. So, but just to your point, Scott, I mean, I think we have three options, because we have the proposal that we also specifically address GFS. So I think, you know, where we seem to be going, if I understand this right, is that we have IFRS, a sort of public sector alternative, although with the sort of caveats and, you know, we don't think this really works type of explanation, and GFS. Eileen, back to you.
Thank you, Chair, and thanks, member, for the comments. As Renee mentioned, this is sort of what we were hoping for, is to really get a robust discussion across members. So this is really helpful for us. Now, I'll clarify the point about your question, Renee, on the categories, the public sector specific alternative categories that we're talking about and what you're seeing in Appendix 2. What we are hoping for from this session is essentially to take that as a direction to say, let's refine the CP more now to show that these are some of the options we tested. The one you saw there with the kind of mapping, if you will, to IFRS 18 was one of the ideas proposed in the discussions with the task force that we knew didn't necessarily fit all, like, check all the boxes of what we would want the categories to do, but it can give us some leverage to really showcase how the IPSASB did really try to find this alternate public sector set of categories, and these are the overarching challenges we found. So it becomes a much more specific thing that constituents can point at in their response to our CP. Now on the GFS side, the one thing I'll just note that we can take away further is when I onboarded onto this project, I know Anthony had done some previous work and analysis and research on GFS and what that would mean for the statement of financial performance. And from that research piece, it didn't seem like we were getting a lot of traction in exploring that GFS option further for this statement. Now, from what we've heard today here, I think that does give me the essentially the instruction to take away for this quarter to try to synthesize some of that existing work and maybe have a proposal for a way forward of what that GFS approach may or may not look like, whether that would work for us to incorporate into this chapter for us to look at next time. But it's helpful to know that this is something that members do feel we should tap back into. Dave, I'm not sure if there's anything you want to add, or David as task force chair on this item.
Just one point on the GFS option, maybe to provide a little more clarity. So the board did, as Eileen mentioned, did talk about this last year in the context of the balance sheet. We did talk about this earlier in the project, and we decided that the GFS option wasn't the best option for us. I take the point that we can clarify that in the CP, and I think that can be pushed through all the chapters. I hesitate instructing staff to do too much work on what the GFS option looks like on the statement of financial performance. Or
I don't think we're reopening that. I think what we're doing here is we're saying in terms of the statement of financial performance, that's the.
But I guess what I'm saying is it's difficult to marry up a non-GFS option on the statement of financial position with a GFS option on the statement of financial performance.
I think let's not go there in terms of the statement of financial position, because there's all kinds of caveats around that in terms of GFS. So I think all we're asking for here is on the statement of financial performance that. And I think you're right, though. I mean, basically, every time we've looked at this, the board has said, no, that's not a route we want to go down. But I think to Angela's point and to Claudia's point, actually, and if you go back into the preface, actually, I think what that's saying is we need an option that's on the table, even if ultimately then we go, look, we've looked at IFRS 18 with the option of adding guidance. We've tried developing public sector specific headings. We're not really convinced about that. We've also looked at GFS. We're not really convinced about that. And that might bring us back then to a preliminary view that it's a sort of IFRS 18 with some additional explanation. But I think then that gives you, we have looked at 3 options, and here's why we're back at this. And that probably then goes to, actually, we have looked at the landscape. We've set that out in the CP, and here's why we think we're going this route. And with that, we're at 10:39, which means it's time to take a coffee break. So I think has given the staff direction in terms of the shape of the chapter that we're looking at. What I'd like to do when we come back from coffee is walk through the drafting as we have it at the moment and ask for any incremental additional comments, and then we'll come back a bit and discuss the PV at the end. And so coffee break, and back here at 11, please. Okay, so if we can come back and make a start again, because we need to break at midday.
So you're going to serve Sam, yeah?
Yeah.
Okay.
Okay, so I think we have some specific instructions for staff and the task force in terms of the development of the drafting in terms of chapter 4. What I want to do now is just literally walk through sort of page by page and just pick up any, obviously drafting points to Eileen separately, but literally additional matters of principle which are not there at the moment is what I'm looking for. So we are in item 11.3.1 and we're on paragraphs 4.1 through to 4.4. Okay, so then we move over to the page. So we've got the table at the top and then through to paragraph 4.9. Yep, Trisha.
I think 2 points. I think in 4.2, sorry to go back. Okay. I go back a little. In 4.2, I could not understand how to include the statement of changes in net asset equity in this paragraph. Maybe to understand the reason why. And in the next page, I think to present this figure make more confusion than help us, because it's not the one of the possibility to present this information. I don't know if in my view the figure doesn't have help to understand the proposals.
I mean, it was trying to give just a kind of overview of what the situation is at the moment. I mean, maybe there's something that just in terms of the preamble that might help clarify that. But does it do any harm as it is? So I think my question is maybe there's something just in terms of the lead up, because all it's trying to do is actually give you a kind of, this is what you get under IPSAS 1 at the moment. And then we've got some more specific examples which exemplify the, what you would get under the different presentations. So it's helping people from, this is what so this is where you are at the moment, that's what you could get, and that's our view. So if that's okay. Dave, do you want, yeah, okay.
So we're on to the third page, paragraph 410 to 414. We're on to page 4, which is paragraph 415 to 418. Page 5 is paragraph 419 to 421. Then page 6 is the table 1 and paragraph 422.
On that one, I think, given that we're now saying that there will be 3 propositions, I think from a stakeholder point of view, it's going to be quite helpful if we actually make that, turn it round into a landscape table and have use that as a way of actually bringing together the pros and cons of the 3 alternatives. Karen, you on that? And I know, sorry, Mary, I missed you earlier.
You go, Mary, go.
Thank you. My question is so simple. Table 1 and the benefits and drawbacks of using IFRS 18 categories, and the Luna pointed out, I'm so interested about the Appendix 2, that adaptations of IFRS 18 categories, and so the readers can read the adaptation possibility, can understand, and so maybe the drawbacks and whether the using IFRS 18 categories or not IPSAS, the IPSAS approach, and so it is one or the other, and so thank you.
Okay, thanks, Murray. So I think we need to be very clear then about the navigation to make sure that linkage is there. Eileen, did you want to come back on that before I go to Karen?
Thank you, Chair, and thank you, Mari, for the comment. We can definitely take that forward because one of the challenges that staff and task force had in drafting this part of the chapter is we started repeating ourselves. Some of the benefits for one might actually be some of the drawbacks for another option. There might be overlays. So now that we are pivoting how we are writing this part of the CP and we're creating that larger table, as the chair noted, that gives us some room to try to see how we can put all the arguments together. But definitely point taken. Thank you.
Okay, thanks for that. And that's probably something, Eileen, in terms of the drafting that version of the table, it would be useful just to test that out with Mari if you can. So Karen and then Patricia.
Thank you, Chair. My point was actually probably more on the second table, but I thought I'd raise it here because it's really about what we're presenting in the tables. And going back to my previous comment about users and who is this for, I just think we need to be a bit careful about the pros and cons in terms of the users, because there will be cons for people who are not our primary users or pros. And so just thinking about how we frame that and not to overplay it. I'm not saying don't mention it, but just make sure we don't overplay that.
Thanks, Karen. Patricia.
I would like only to confirm if for each proposals, each categories will be described, and in the challenge you'll be identified in the application, and the benefits of each categories too. Because I think the discussion today was about these two things: the benefits or the use. How useful is this category for the users, and the challenges to apply these categories. I would like to confirm if it is the scope of the next stage of this project.
So I think the idea with the table would be that it's the overall presentation rather than the individual categories. I think then in framing what the benefits and what the drawbacks might be, then I think that's where some of that discussion in terms of there may be a need to split this or something like that, you know, that may come into there. I think probably what we need to do is actually see the table back or rather it'll need to go through the task force first and then come back to the board to see whether we can accommodate that, you know, the sort of just the points that you raised earlier in terms of, because I think some of that may be capable of being done by greater clarity over what the categories would be in the public sector, but there may be still some challenges along the lines. So I think input into the drafting of the table, and then we'll have a look at it. There's a limit to how much detail you can get into. So I think let's see that back and then we can go from there.
I think Eileen has something to clarify. Oh, her hand went down.
No, just to echo what Ian was saying, I think we have a bit of a balancing act that we'll be doing, but given that members have given us permission to really expand the CP and put more into it, we could probably add 1 or 2 paragraphs about some of the additional public sector guidance as you know, in compliance with the rules of the road that would help us with the application. And that might kind of bring in some of what you're looking for, Patricia. But we will definitely work on that and connect with you.
So that takes us to page. Oh. That takes us to page 7, which is.
Sorry, Adrian.
No, just a minor wording comment on 418B communication. Indeed, it's quite an issue, but the example that are given do not address the real issue. The issue is not the issue of being a taxpayer in one jurisdiction or the other, is the perspective of the user. It's always the perspective of the user. So the first time you say, for example, a taxpayer may wish to seize government revenue, it's not the taxpayer, it's the service recipient, it's the citizen. Could be the citizen. You could say a citizen may wish. And then the second, however, a taxpayer, yes, the taxpayer wants to know what's the use have been made of it, of the taxes is paid. And then others, not only taxpayers, may wish to see both. Others, not, because not all taxpayers are citizens, not all citizens are taxpayers, but there are citizens who are also taxpayers. So my point is to say, no, it's not, the point is not being in a jurisdiction, is the perspective of the users. It's always that. Communication is about perspective of the message sender and the message recipient. Seems to be just, you know, editing the wording, but it's a matter of principle.
And I think if we actually add back in, if we add into the an appendix, the relevant part of the discussion on primary users, I think that will help with this section, because then it gives you a frame of reference to test against in terms of articulating that point. And you're right, you know, in terms of they're not, you know, service recipients and resource providers are not exactly the same categories. So that will help them with the drafting. Okay, thanks for that.
So I'll take pages 7 to 9, which are the examples of how we could transfer the 3 examples into IFRS 18. And then paragraph 423 on page 9. Page 10, which is paragraph 424 to 427. Supporting document 2 on page, that's it.
I think we're through then, aren't we? Yeah, okay. Adrian, you're still in or no? Okay, okay. So I think that's really helpful. So I think we've got some clear instructions there for staff and the task force in terms of development of that chapter. And I think that table is going to be a crucial part of it. You know, because that's where you do put the 3 alongside each other. And I think then that leads into whether the board will feel in a position to provide a preliminary review or not. And I guess, you know, I'm just interested at the moment, and this is not committing any of the board members, but I'd just be interested if we, you know, are going to present three categories, you know, which would be sort of IFRS aligned with additional guidance, the public sector alternative or the GFS alternative, just where board members' views would be at the moment. Because I think that would just be useful context, because we have had a lot of discussion and debate backwards and forwards. And ultimately, we may or may not feel in a place that we can express a majority preliminary view or not. I don't know. But again, I think that would probably actually be helpful context. So I'm not tying everybody down at the moment, but I think it's just would be helpful. Karen?
Just a clarification question. Are there actually 2 questions here? One is, do you support categories? And then if you do, which one do you support? Because I think, because there may be people who don't support categories at all out there. So I don't know whether I'm splitting hairs or whether actually there are two different questions, because I can probably answer the first one at the moment, but not the second. So
No, it's a good point. So, you know, again, I mean, I think that's, as you know, this is the point, that we're just trying to sort of tease it out. So if we have two questions, do you support the use of categories or not? Just interested in a straw poll at the moment in terms of, would members support the use of categories? Can we just do a quick show of hands? Yeah, it's not binding you at all, just.
So everyone in the room has their hand up or partially way up.
Yun has.
Yun has her hand up. Yakuba has his hand up.
Abdullah,
I don't know if you can maybe thumbs up or put your hand up virtually if you're there, or you might be away from your computer.
okay.
So I think that's pretty clear categorization.
Okay, that's you know, just I think that's useful in terms of the framing of the drafting, and then just literally a sense of where members are at the moment in terms of those three. You know, if we're writing it in terms of those three categories, where members would be. You know, you need to see the drafting. I acknowledge that, but just interested. So if we do first IFRS 18 aligned with guidance.
First option, IFRS 18 aligned categories with description.
This is totally non-binding. This is totally non-binding.
Just directional.
Yeah.
One. Can you leave your hands up, please? 1, 2.
And Yun and Yakuba are online. Oh, and Abdullah.
So we have 10, 3 online, 7 in the room. Oh, and David, so make that 11.
On behalf of me. Yeah. And then who would support a public sector specific set of categories? Okay.
Don't be shy. Put your hands up.
Yeah. No. I mean, this is just where are we as a board? Just helpful context. Okay.
3.
Yeah. And GFS.
No, that's different.
That's different.
You're
changing.
You are GFS. So change.
Okay. I mean, that you know, I think it was just sort of, you know, recognizing we need to see the drafting, but it's just interesting to get a sense of where members are at the moment, because I think that will, you know, then the question is, are we likely to leave this open, or are we likely to, you know, express a view, even if that's a tactical positioning rather than necessarily where all the board members may want to be, and recognizing that is an option for us, that if we want to give a steer, that will help, because people always react to a steer, you know, and if they don't like it, they'll, you know, whereas if you just go, then they'll. Angela.
Thanks, Chair. And it is going to, I'm looking forward to the next paper. And the reason I'm sort of in two minds right now is Scott pointed to 4.17, where we have this wide variety of different types of agencies. And in a gut level, I can see some benefit in the GFS kind of presentation for a certain sized organisation closer to that sort of whole of government, larger level, but perhaps in a service agency, I can see an IFRS 18 as a kind of one size fits all, but, you know, some acceptance that you might not have financing or what's the other one? Investing. So I'm sort of thinking, well, if I had to just go for one size fits the whole public sector, then I'm sort of in IFRS 18 alignment with appropriate guidance, because that fits the majority of them, I think. And there's no reason, say for like in Australia although that's incorporated in the gap, they go a bit further. But at the state level and the federal level, they tend to use a GSF presentation. So I'm very interested in the GFS presentation and whether that option can kind of create a category that might suit a wide variety of agencies, not just the whole of government. And I'm only familiar with GFS from the Australian experience, which it's only at one end of town. So I'm just fascinated by what comes back. I still don't know what the something else is. So again, it's very hard to have a gut straw feel when you don't even know what it is yet, or whether it's just a description of that we tried, but we couldn't think of anything.
Well, I think, Renee gave us a way forward on that, so we need to see that back. But I think it's still useful, this point about, look, we've tried to come up with something public sector specific, so I think we just need to see the drafting back on that. And like you say, we need to see the GFS material incorporated. But I think probably where we've ended up as a result of today's discussion is actually we probably hopefully have a clearer shared view on what we're looking for. We've got three options. We'll have a table that puts some pros and cons, and that should hopefully then, within the context of the framework, actually gives us the ability to then say either we think majority board members might go this route, but and then we'll ask for comments. And I think it'll probably be there'll be an SMC on this, and then I think the question is there also a preliminary review or not? And we'll need to go back around that next time round when we see the draft. Good. Eileen, I think we're probably ready to move on to the next section.
Thank you, Chair, and I appreciate we got about 35 minutes, so I'll get through the presentation as quickly as I can to open up for discussion. So Dave, would you mind just moving to the next slide for me? Thank you. So the second agenda item for discussion today is continuing the discussion from December about presentation of revenue and expenses outside of surplus and deficit. So under current IPSAS 1 requirements, these are all presented on the statement of changes in net asset equity. Now in December, the IPSASB technical advisors, as well as the observers, engaged in some very fruitful discussions in the breakout session and considered two specific questions with CAG member advice in mind. First, whether or not the current IPSAS 1 requirements on presentation actually provide sufficient transparency and already clearly communicate this financial information in the financial statements. And if not, then how could the IPSASB enhance the transparency by requiring preparers to potentially present this information elsewhere, so changing the location, which statement it's presented on, to be more accessible and understandable and better convey the nature and substance of that information, and also what term might we want to use to refer to this grouping of items. Now, in the report back, it was a very mixed view from the different groups and participants, and that really reflected that the next stage for us is really try to synthesize some of the benefits and drawbacks of these two specific presentation approaches, and really come back again and see what we can do. So to support the IPSASB in progressing this discussion and potentially considering a preliminary view at this meeting, we conducted some additional research and analysis, in particular in looking into the basis for conclusions from the IASB, as well as connecting with the IASB staff to confirm how they determined which income and expenses are recognized outside of profit or loss, because those decisions on that allocation about what's in and out were also the basis for the IPSASB's own decisions on what revenue and expenses are in surplus or deficit versus outside of surplus or deficit. So the results of that work and the discussions confirmed what the IPSASB and staff had discussed and analyzed earlier in this project, that the IASB's decisions were really done on a project-by-project basis, and the IASB did try to consider but did not successfully identify nor articulate a conceptual basis, a definition, or even a prescriptive list of what is actually an item in OCI outside of profit or loss, or those that are in profit or loss. And so Appendix 1 of this paper provides more details about that piece of research and discussions that we had from the connections with the IASB. Now, if we take a step back and say, well, what are the implications for us? Like, what does this mean for the IPSASB? Well, as members had confirmed in December, the scope of this project does not include a re-review of past IPSASB decisions in individual IPSAS about which revenue or expense items would be in surplus or deficit versus outside of surplus or deficit. This project is focusing on the presentation requirements in current IPSAS 1. And so if we step back and think about the findings and what that means in terms of next steps, I think it really does coach the fact that transparency of financial information is still the top priority. The location, so which financial statement presents this information, and also what terminology we use to essentially refer to this grouping of information, they're tools to help enhance or achieve transparency if needed. Now, ultimately, users are going to be focused more on being able to find and then understand the information that they're looking for. So where do they go? Which statement do I look at? How do I know where to find this information so that they can understand this, analyze it, and then make the decisions accordingly as users of the financial statements. So this really highlights that to serve the public sector and meet the user needs, then the IPSASB should select the presentation approach, which would provide a greater level of transparency for users. Now, there is some additional analysis in the paper, which just for time purposes, I'm not going to go into more, but it's just about the potential terms that we can use depending on which approach we take. But happy to hear more deliberation on that, depending on which approach members are favoring at this stage. Dave, could you move to the next slide, please? Thank you. So similar to the last item, we wanted to just give a one-slide summary of what this new draft chapter looks like. And similar to chapter 4, this is really a starting point. It was meant to synthesize a lot of the color, the detail of the different member deliberations and discussions into one place so that we can use that as a starting point, refine it, add to it as the IPSASB finds the direction forward that it would like to take on presenting these items. So current chapter 5 includes relevant background, the IPSASB's views on transparency, which were relatively mixed, and also indicating the importance of communication, both on the face of the statement as well as how the note disclosures can help enhance that so that overall there is a clear picture being presented to the users of the financial statement. There are two approaches that were coming through from the December session. And I think even prior to that, during the breakouts in the March 2024 session, it was quite clear that GFS was not the right way to go for it. And so the board had instructed staff to essentially present these two approaches. One is taking the IFRS 18 approach, or to keep IPSAS 1 as is, but potentially revisit some of the disclosure requirements or how we've written certain guidance so that we can make it clear and make sure that the preparers are presenting information and clearly to really tell the right story and give the right narrative. So with that, to the next slide, please, Dave. In summary, the results of our analysis had confirmed that the IASB's decisions on what is in versus outside of profit or loss did not have a conceptual basis on that allocation. It was really done on a project-by-project basis, similar to how the IPSASB's was done on a project-by-project basis. And ultimately, transparency is key. The location of information and terminology are just tools to help enhance or achieve that transparency. We, of course, engaged a task force on this as well, and really appreciate the time they spent to review the considerations, the drafting, and propose their current views. And what we found was that 5 out of 7 task force members supported retaining IPSAS 1 with maybe some tweaks and enhancements of that guidance, because it primarily for the reason that presenting financial information on the statement of changes in net asset equity already provides sufficient transparency to meet the user's needs for accountability and decision-making purposes. So while the location information may differ from IFRS, it's still good to note that the information presented within it is still the same, but just on a different statement. Now, on the terms, the task force also had some mixed views. They did overall agree that there's no perfect term. It's really hard to find a perfect term to refer to, such a medley of items. But the task force did advise the IPSASB to really think about the term based on the direction it takes on the location of this information. So if we do end up on the IFRS base, some task force members said, let's just use OCI for consistency. There was also some views that if we take the IPSAS 1 approach, don't add a term because is that really going to be helpful? So definitely a mix of views in that perspective. So we're looking forward to hearing the member deliberations today to kind of help us with that forward. So with that, I'm going to pass it back to the chair for discussion on the analysis and work done through Q1 before we go into a page by page of chapter 5, similar to how we approached the last item. Thank you.
Okay, thank you very much, Eileen. Very helpful. So as advertised, open up for member comments on how the instructions from December have been actioned. Sounds like staff in the task force have done a good job. Karen.
I guess I have a question rather than anything else, which is going back to that, what's the problem we're trying to solve here? I just wondered whether there was any specific feedback that staff or board members have seen about this particular statement that will kind of help inform, or that may have already been provided and I'm a latecomer to this. I have to say that I'm probably I'm with the status quo and I don't have any issues with what's presented, but I don't know if I'm missing a piece of information that might be relevant or helpful.
Eileen, do you want to come back on that?
Yes, sure, happy to. And thanks for the question, Karen. It was a question I asked myself too when I rolled onto the project. So we have heard from constituents just through different research phases when we kicked off this project. Part of it is because we have this misalignment between the IPSAS and the IASB, because they had essentially introduced OCI and moved this group of items into their statement of financial performance or a second statement of financial performance almost 20 years ago now. So it is a continued, I guess, difference between the IPSAS and the IASB's guidance throughout the literature. And so this really was a good way to, say now that we're embarking on this project, it would be good to consider whether or not that misalignment is still something that makes sense for us. So through the breakout sessions that we had in December in particular, I think is where we really got more feedback from breakout participants. And that's beyond just members and TAs, but observers that are attending, which include preparers. We did get a better understanding about, when we think about, do we have the right level of transparency? Is that alignment necessarily needed? That's where we started teasing out a bit more about that full understanding or fuller understanding of what users need. To echo what Dave had said earlier in the session, I think going out with the CP and asking clear questions and putting the right information in the CP will help us really test that. But at this stage, we have heard some, but a lot of it comes down to that alignment element.
Thanks, Eileen.
So just to clarify, no one has actually said that something is broken here, but there is this long-standing difference is where we're at.
Yeah, and there was maybe one or two comments about, well, the equity statement, so statement of changes in an asset equity doesn't get as many eyeballs or views on it, so maybe that information is not really being seen, but that's not really a transparency problem. It is still there on the statement. It's just whether or not users are going to see it. So I think it is still very much. I think the alignment piece is the major comment that we've seen from that feedback.
Thanks, Eileen. And if anybody's in any doubt about the pervasiveness of this, if you actually look through the IPSAS IFRS dashboard and you look into table 5 there, which goes standard by standard, if you just scroll down that, you will see the number, now that Joao has actually cleaned it up, you will see the majority of standards, actually, there is some impact from this. So it is a big issue for us. Patricia and then Angela.
Thank you. I would like to clarify one aspect. I agree, in general, I agree. But in relation to the how to present the information and aggregating in a total performance, I think I need to think more about this, because when I consider the changes in net asset equity statement of change in net asset equity, the idea is to include in the same column the revenues and expenses in surplus, in deficit, in the outside of surplus and deficit in the same column. If it is, I think it's not a good choice for transparency, because in the next period, if I am considering the revenues and expense outside surplus and deficit in same column in the statement, in the next period, the beginning balance, I have two kinds of revenues and expenses in the same begin amounting. And I need to think about more to how to aggregate. Or I think it's better not to aggregate, have a specific column only to disclose the information, to present the information about the outside revenues and expenses. And the name, about the name. The name normally is the revenues and expenses outside of the surplus and deficit is related to evaluation, for example, fair value evaluation, or for any investment evaluation. And I think the name, it's not necessarily a performance, but I think the name that Brazil used the name evaluation adjustment to identify this kind of revenues expenses, to separate with what is performance, what is the change derived from the evaluation or some accounting procedures. Thank you.
Thanks, Patricia. Let's not get hung up on names. We always get names is always difficult. David, you just wanted to come in on the principle, I think.
Yeah, thanks. I just wanted to sort of try and help clarify something here. If we retain, as suggested here, as the retaining and enhancing the IPSAS 1 presentation requirements, there would be no need to change any names. The change in term has only been suggested if the board decided to go down the route of the OCI, for want of a better term, but the sort of feedback that we had and looking at it as a task force, because of the way public sector works, we didn't really think that OCI, or other comprehensive income, was necessarily the right term. So if the board decided to do that combined statement, so aligned with IFRS 18, then we would think about substituting OCI for, and we've suggested, other financial performance, with the total of what goes through surplus and deficit and what doesn't go through surplus and deficit. The total would then be total financial performance. So that second, the bottom bullet point on that slide is only if we went down the IFRS alignment route. I hope that helps a little bit.
No, I think was the answer to. I mean, Tricia, anything to add to your earlier intervention, and then I'll go to Karen.
Because for transparency, if I continue with IPSAS 1 and to present and disclose the information in the statement of changes in the equity net assets, I need to have some specific information in the net in this statement, and to separate the changes in the net assets derived from the revenues and expense that are recognized in the surplus and deficit, and the revenues and expense that is outside of surplus and deficit. Because the nature, I think it's so hard to sorry, define the nature of these kind of revenues and expenses, but you know it's different, and there is some objective to not to include in the surplus and deficit, and normally is related to fair value and evaluation, fair value evaluation, and other type of, for example, the evaluation some investment. I think it's I'll continue, but some improvement indicate clearly that you need to separating in this information in the statement of changes in net assets and liabilities.
Okay, thanks for that clarification, Patricia. I can see the point you're making in terms of essentially valuation-driven movements from other things. Yeah. Okay, thanks. Karen, then Angela.
Just a really brief point that actually builds on what Patricia was saying, and I think the fact that not many people look at the statement may be reflective of how relevant people think the information is. And I think there it is as you say, was it a medley of things that are in there, and when we go back to looking at primary users and who they are, I suspect they're more interested in those things that relate to service delivery. And so if they're looking at the financial statements, that's what they're most interested in and need to have clarity over. So I think actually the separation, you know, of the information could actually be beneficial for users because they get the simplicity of the presentation of the information. But I think inclusion of this and maybe you know, framing some of the content to kind of get to that point might be quite useful to understand what users really want and need out of this and what's helpful for them.
Thanks, Karen. So I think, again, that goes back to actually if we include those extracts and the conceptual framework, I think that will help provide that context. Angela.
Thank you, Chair. And just building on Patricia and Karen, what I understand and what I also suggest is that the option for status quo equity net assets, the next question is, do we want enhancements to that in terms of its content? And one of the things that I think that one of the enhancements, regardless of the geography, one of the enhancements I think the IPSASB put in was to separate items that were recycled and not recycled. That is an enhancement option. There may be others, and I wondered whether, and I can't remember whether we discussed that as a task force, but that could be, it's in that concept of, is there an enhancement to the status quo to help with user needs to understand those items? And I suppose I come from an experience that uses both OCI and net assets equity. And I'm very clear that the users in our jurisdiction, they see the items in there as either revaluations of property, plant and equipment because the jurisdiction's current value, and they think that's sensible to be in reserves because it's a long-standing layperson's kind of idea of revaluation of physical assets. But then there are some special hedging items or certain investments in entities which the value goes up and down in those reserves and some is recycled and some is not. So it's a little bit more complicated. So the question is, if we keep the location of status quo, are there any questions we want to ask constituents about? Are there opportunities to enhance the status quo?
Thanks, Angela. So I think, maybe we can just clarify the discussion that's already there in terms of being clear that what's in, there is a proposal to enhance what's already there. I mean, I think, if we sort of set it up, essentially, you've got a kind of IFRS 18 compliant OCI option, you've got this enhanced public sector option. And I think, if that's what the board is proposing for the reasons that, have been articulated, and I think there are likely to be more current value adjustments and so on. So you can see a clear reason for doing that, then we should propose that. If the board lands in favour of that option, then you can always ask a question in terms of the proposed enhancements to get feedback on that. So it's probably helpful to get that clarification. Okay, I'm just trying to see if I missed any hands online. Okay, so what I'd suggest then is we just do what we did before, which is just actually have a look through. Sorry, who? Oh, sorry, Eileen. It's almost impossible to see people's hands. Sorry.
It's okay. I didn't want to cut you off because I could bring this point up when we go through the page by page as well. But the point that Angela noted, I did want to share that staff have been thinking about, what kind of enhancements could we have? And this was really because of the discussions from the breakouts in December, where those that were in favor of keeping IPSAS 1 were saying, well, right now, if we look at how the note disclosures are and how it's presented on the face, we could provide more narrative. We can make it clear. We can add more reconciliations. And so I've been collecting all that feedback, looking at what our IPSAS 1 guidance currently presents. And I think we have the basis for them. It might be more of how could we refine how it's written in IPSAS 1. And the other element is in IPSAS 1, it currently gives you two options for how you present this piece of information, the reconciliation with the columns, as Patricia mentioned, or maybe that really simplified version for the face, but a reconciliation table in the notes. So that is something that we will consider further if the board decides to take an IPSAS 1 approach here for the CP. And I do agree asking SMC, or sorry, not SMC, but asking NRPV about if there's any other enhancements that users are specifically looking for that will guide us in the right direction for the next phase of this project. So just wanted to add that to note that we are thinking about it, but exactly what enhancements, I think that's where it really depends on if we take IPSAS 1 approach.
Thanks for that. So I think let's go into 11.3.2 and David, as before, if you can lead us through just on a page by page, additional substantive issues that need to be there.
So we're on page 39 of the document, but page 1 of chapter 5. So page 1 of chapter 5 is paragraphs 5.1, 5.2, and figure X. Page 2 is paragraphs 5.3 to 5.8.
Sorry, Karen.
I'm on page 2. It's a minor point. She's verging on drafting, but just as a point of principle as well. In 5.8, it refers to there being mixed views. I think if we are referring to views on a particular topic, we need to be clear where those are coming from, so that any readers of it understand the context for that viewpoint being put across.
Okay, thanks. Have a look at that on drafting.
Page 3 is paragraphs 5.9 to 5.13.
Yeah, Patricia.
I think here can be paragraphs 5.9 about the aggregation in this aggregation or not. I think you indicate for transparency in relation to different changes in different revenues and expenses. I think there is a minimum of the disaggregation. I think it need to indicate that it need to separate this type of changes in two different part of this statement.
Okay, so I think that's it's a more specific point, isn't it? So thanks for that. Okay.
So back to page 4, which is paragraphs or figure X and paragraphs 514 and 515. Page 5 is table 1.
Andrew.
Thanks. I think we just need to be careful with the wording of the first two bullets on the benefits there, in that we're stating it will result in more visible information in a comprehensive manner and supports transparency and accountability. I don't think anybody's actually ever been able to conclude whether those aims have actually been met on a private sector side. So to state that it will achieve that, I think is just a very strong statement.
Yeah, fair comment. I mean, there probably is a presentational point here that if we go for a comparison table in chapter 4, there probably ought to be a comparison table between the options here. And that is more helpful than in terms of demonstrating how on balance the board has arrived at a view. Scott.
Yeah, I guess I had a reaction. Does this imply that IFRS is not transparent in performance? I mean, we got to be careful because we'll say in that we're doing this because it is, so it implies that the current standard is not, their standard is not. So I'm not sure that's what we want to say. So back to your point, Andrew, and we ought to watch the wording in here because are we saying the IFRS statement's not transparent?
I think
that was my reaction when
improved, enhanced, and that.
Right.
Okay.
We got to be careful there. Yeah. The reason I brought that up was I'm not sure we really got to the public entity, public sector difference here. Okay, we want to be transparent, but all financial reporting wants to be transparent. So I wasn't really sure where we really met the bar about public sector specific. So that was why I raised that here on Andrew's thing. I'm not sure we really made that argument here.
And I think if we put the two options alongside each other in the table, then that does actually force you to be more.
Right.
Yeah. Okay.
So I think that brings us to page 6, the drawbacks in paragraph 516 and 517. Page 7, paragraphs 518 to 520.
Andrew, then Claudia.
Thanks. It was just a proposal just to sort of move the text a little bit. The new terminology that we're proposing, if we do go with an OCI type equivalent, it doesn't read that way. It sort of seems we're going to introduce this new terminology whichever way we go. So I think it's just reordering the text to make that point clear.
Okay, thanks. That was clearly Claudia's point as well. Okay.
So that brings us to page 8, paragraphs 521 to 527. And that wraps us up.
Okay, that's helpful. So again, I think we've got a number of specific instructions there. And again, I think it would just be quite useful just to get a sense of, you know, where members might currently be in terms of IFRS 18 versus enhanced IPSAS 1. And again, non-binding, but just interested in where members are on this one. Okay, so Ross.
So those in favor or leaning towards IFRS 18, raise your hand. One online, two online. Okay. Well, I say then I guess our other option is those who are in IPSAS 1 enhanced. Sungjin, are you in or out? Okay, thanks.
Okay, I mean, I think that's just, again, it's just very helpful to get that sense. And I think, you know, in terms of the drafting of the section, then, you know, we'll clearly come back and look at that next time round. But I think it's just very helpful to get that sense. Great, okay. So, Eileen, anything more from you in terms of the session?
No, that's it. Thank you to members for the discussion today. I think it was quite robust and really helped to move this forward. I appreciate these are two pretty challenging topics, so this does help us to write a more comprehensive CP, and we'll take these actions away. Please note that for some members, I might reach out to you directly offline just to make sure that we capture your points appropriately for the CP. But thanks very much for the time and you know, for the good questions that you pitch as well, because it helps us make sure we're moving in the right direction. So thanks very much.
Yeah, thanks very much, Eileen, and thanks again to the task force. But I think thanks also to members. I think we've had a good session this morning in terms of really giving a sense of direction as to how we see this developing. So that's great. So I think with that, we are on time in terms of breaking for lunch. And as I said earlier, we are being hosted by the OPCS team here within World Bank. So thank you very much to them. And that will be downstairs. So just to remind you, Leah is now heading off in the direction. So you go across the atrium. And then Leah will be standing there waiting to direct you in the right direction. Because of travel time, we will have an hour and a quarter for lunch. So back here by 1:15, please. And then we'll move into discussion of the strategy, or not strategy, the work program consultation. Okay, thanks very much, everyone. Okay, so welcome back, everyone. Thank you very much to Samir and our colleagues in OPCS for a really nice lunch. Very nice that they were able to host us in that way. So thank you. Thank you to Leah for her excellent traffic direction. So now we're moving on to the work program consultation, and you know, just to prove that when staff arrive, they really get involved in our projects. Welcome Saya back for the third time this meeting, and also Karen for the first time, and Karen will be back tomorrow morning. Ross, you just wanted to say something?
Yes, I'm also happy to welcome Saya on the work program consultation. But I did want to remind people that tomorrow we're having a members only session from 9 a.m. until 9:45. This is for members only to receive a quick update on the chair search process. So for everyone else, please plan to arrive at 10 a.m. because there won't be access to the room for anyone but members at 9. Thank you.
Thanks. Yeah, and just to say by 10 a.m. because we'll be starting at 10 a.m. So, okay. With that, Sarah, I think back to you first.
Okay. So is the mic in an okay position for people to hear me? Okay. All right. So thank you, everyone, and good afternoon. I hope everyone enjoyed that very delicious lunch. And now we have some exciting items to discuss this afternoon. So first, Karen and I want to say thank you to those members who did provide us with some feedback on the work program consultation prior to the session. In this session today, we have a number of papers to get through. So what we're going to cover is we'll go through a quick reminder of some of the key points from our current strategy, provide a context for the work program consultation and a timeline of the expected process. Then we'll get into the discussion of the potential projects to include in the consultation under the three categories: financial reporting, projects, post-implementation reviews, and sustainability reporting. We'll also take a quick look at a proposed outline of the consultation document, and then we'll discuss resource availability, which would inform the number of projects that we could take on based on the feedback that comes back from constituents. So I'll turn it over to Dave to give a quick update on the strategy.
So this is just a quick reminder of what we proposed, or not what we proposed, but what is actually in our 2024 through 2028 strategy. This slide should look very familiar to you. It's one we worked on, and that one was strongly supported by stakeholders. It's actually what we went out and proposed in 2023, and like I said, was strongly supported. So it's what we ended up going with in the final strategy document. The way I always like to talk through this is I start at the top, and that outlines the strategic objective the board put forward. That's strengthening public financial management and sustainable development through increasing the use of IPSAS and our IPSASB SRSs. And the way we do that is really through two main activities. And the top one, the delivering global standards, that's really where the IPSASB leads. Is what we do at every single IPSASB meeting. It's what staff does on a day-to-day basis. And we've broken that into two broad categories. The first is financial reporting. And I know this will be to everyone, or obvious to everyone around the table, because we've talked about it a few times today, but the big shift there is we've reallocated resources away from just standard development to also maintenance activities. And that's the application group and post-implementation reviews. The top right quadrant is obviously new to the board. It's our sustainability work program. And right now we're going through climate right now. Obviously no maintenance activities yet because we don't have anything to maintain. The bottom half of the circle is where the IPSASB looks to partner with organizations that have similar views to the IPSASB. So where I said the top half of that circle is really where we lead and we drive the development of global standards. The bottom half is where we look for those organizations that believe that accrual accounting and sustainable development through our reporting standards is important. And we partner with the World Bank, the IMF. When we go to regional outreach events, we partner with organizations there like the Pan-African Federation of Accountants, or FOCAL, which you heard about earlier this week, and really try to give outreach and talk about the benefits of accrual accounting and our sustainability reporting standards. So didn't want to say too much more than that, but just wanted to give board members a quick high-level review of what was proposed, what was strongly supported, and what ultimately went out in the strategy. And as a result, really leading to the consultation that we're putting forward. And maybe the last point that I'll put forward on this is in the actual document, we did highlight that when resources became available, the IPSASB would consult on what we would take forward, but we're not opening up what the strategic objective is or anything on this slide. Is really what we would add to the work program.
Thanks, Dave. And I think just to underline, I think this week has really been fantastic in terms of being here and the interchange with colleagues from World Bank and IMF and PIFA Secretariat and so on. And I think, that really, we've really been in the space of the advocating benefits of financial and sustainability reporting information, and a lot of the time, what goes on in that space actually kind of goes under the radar. So, for example, you know, the excellent publication that the bank actually has just published, and I'm looking at Srini here in terms of Srini and his colleagues, which is a huge amount of work has gone into that. But actually, that's been something that we've contributed to, you know, staff and myself, you know, commenting on drafts and so on over a period of time. And I think it's things like that that don't, you know, sometimes, you know, we're not sort of talking about that all the time in the board, but that is really important. Similarly, the contribution in terms of, you know, the update of the GFSM 2014 also goes into that space as well. So I think those are really important. And then also the, you know, at jurisdiction level, if you're looking at promoting adoption and implementation, that's really where you all play really important parts through the outreach that you do, as well as through the formal events that we do, the roundtables, regional, and so on. So I think, you know, this week has just really showcased what goes on that inspiring adoption and implementation, in a way that normally I think it just goes on, if you like, it's the sort of large part of the iceberg, but the standard setting is what goes on top. So I think it's just useful to remind ourselves about that. So with that, over to you, Saya.
Okay, thanks, Ian. So just some context for the work program consultation. So this is agenda paper 12.2.1. So at the board's last meeting in December, the IPSASB started considering the availability of resources in 2026 and beyond. And there are going to be a large number of projects that will be completed in late 2025 and into 2026. So there will be resources becoming available. And you can see that by the white space that's on the image on the slide. And so the board decided it would be appropriate to consult with stakeholders in 2025 to get their feedback on future project priorities. So then we can efficiently transfer into new projects as resources open up. Also, in addition to resources becoming available in 2026, the IPSASB will also have a new chair, and consulting with stakeholders at the end of 2025 to determine future work program priorities will allow the next IPSASB chair, along with the board at that time, to analyze the responses and determine the work program priorities for 2026 and beyond. So as Dave mentioned, in the 2024 to 2028 strategy document, we did commit to going out and doing a consultation with stakeholders to ask them what are their greatest needs for projects we should take on at that point in time that resources were becoming available. And so to capture all the streams of the IPSASB's work program, as Dave mentioned, this would be under the financial reporting and the sustainability reporting half of that circle that was on the previous slide. So there's three categories that we're proposing to put projects under. So under the financial reporting umbrella, the first category is financial reporting projects. So those are actual standard setting projects, public sector specific or international alignment projects. And then category 2 would be the new part of our mandate post-implementation reviews as part of our maintenance activities. And then the third category under the sustainability reporting umbrella would be sustainability reporting projects. So unlike previous consultations, the proposal would be that the IPSASB would not provide a ranking recommending which projects it believes are the highest priority. And the purpose in the thought behind that was to allow stakeholders greater flexibility in their responses to tell the board which projects are of the greatest importance to them, and better ability for respondents to highlight using the project prioritization criteria, which we'll talk about in a little bit, that articulate their case for those particular projects and why do they think they're the highest priority. It also would give stakeholders the opportunity to highlight additional projects that the board may not have been thinking about yet, or emerging issues that they're seeing coming up in practice. So despite the fact that we were proposing the board wouldn't rank the list of projects, we still would provide the project prioritization criteria that you've seen in Appendix A to each of the additional project papers that had the board's summary of the project and our prioritization, which we can discuss those, but we'd provide that as a separate document so constituents could refer to it in case it's helpful for them. They may or may not agree with how we prioritized or what we've listed in those categories, but they could use that then in their response back, and it might be helpful for some who are not sure how to structure the response back. So then if we move on to the next slide in terms of timeline. So based on the outcomes of today's discussion, staff will put together a draft of the work program consultation document, and that would come back to the board in June for a first review. We would also seek advice from the CAG at its June meeting, and that will happen the day before the board's June meeting starts. We will be able to bring CAG feedback back to the June meeting for you to consider as well. Then in July and August, we would seek advice from the PIC, and then in September, we would solicit initial feedback from participants at the Public Sector Standards Setters Forum, which is occurring directly before the September board meeting, and there is some overlap of that forum with the meeting. So that feedback would also be available for the board's consideration in finalizing the document and in getting some initial thoughts. The board would then approve the consultation document at the September meeting, and it would go out and be published in October with a 120-day comment period. And that would mean that responses would be available for analysis during the first part of 2025, which would allow the new chair and the board at that time to analyze those responses and determine the priorities of the work program for 2026 and beyond. And that would also coincide with when those staff resources are expected to be becoming available. So I'll turn it back to the chair for any questions or any feedback on that agenda item. There's no specific decision that was requested.
Okay, so just open up for comments or questions from board members on what Sayers outlined. Yep, Karen.
Thank you. I'll jump in with both feet on this. And I've had the conversation with Saya beforehand in terms of the approach to this, and particularly around what gets listed in the consultation paper, particularly on the financial reporting side of things, where the projects that are on the list have got kind of quite low. Low outcomes in terms of priority attached to them. So I think we need to think about the degree of emphasis, if you like, we put on projects that we don't think have got perhaps the greatest added value. And so for me, I was thinking about, well, and I think it's suggested in here that I know Saya said we don't rank projects, but maybe we don't even list them in the body of the paper, and actually frame what we want in the context of the bigger picture. So, which are the projects that have the potential to turn the dial on the 4 quadrants? Because I think my worry is that when people have got a list, it starts to frame their thinking, particularly if it's in the body of the paper, because they may be constrained just to those, rather than these are the projects that we think are really going to make a difference here and enhance the strategic direction of the board. I think you can't lose sight of the suggestions that have been made previously, and so you can't ignore those completely. But I think there's a question for me about how much prominence do you give to those, and are you able to set out what's needed in a more in terms of the kind of overall link to the strategy and things that might come forward in that context. So that was my initial thoughts around that.
Dave?
I'll say I think that's a good suggestion, Karen. It's a little tough right now because we haven't written the document yet, so you're hearing what I think, but I think it's important to, at the phase the IPSASB is at, I think it's good to give constituents the ability to give very broad feedback to the board. So I think it's a good suggestion not to include the topics necessarily in the core document. And I'll just say something we'll take away and consider when we're writing the document in June.
I mean, it does occur to me in terms of positioning this and how we approach it. One of the things that might be quite helpful in the draft that comes back in June is actually to just have a very good look at the way in which the ISB handled this when they had the chair transition, when they were doing exactly the same thing, because that was a fairly open consultation, and I think it would just be useful just to kind of benchmark where we think we're going just against how they handled that, and then, if you like, also what happened then in terms of the consequences, in terms of the sort of follow through and how that worked. You know, because I think you know, there's a delicate balance here that we're trying to strike, I think. So I think that might be a helpful piece of work, a helpful piece of framing, if you like, for next time round. Mike and then Angela.
So thank you, Chair. I'm just not sure whether I got it right, to which extent we will provide in the work plan some of our ideas in terms of the prioritization criteria. Nevertheless, I was wondering about a little bit the decision to not prioritize, because reading those arguments, what I can understand is a new chair, and he should have more the flexibility, let's say, to take his own decision. But nevertheless, those reasons we have here, I'm not convinced. I think our constituents are really, flexible enough to provide their own responses, whether they agree or whether they disagree. And I think what the analysis so far in that here in that document, they are quite helpful even from constituents. And nevertheless, they can say, okay, we have another proposals for projects. And then keep in mind, we are already at the moment providing some documentation here, which really shows which are our priorities and which are not. And so I'm questioning that a little bit. So if we would decide to, let's say, give priorities for each project that goes in your direction a little bit, that would, from my mind, helpful even as the constituents, because there are some certain arguments which the constituents might have not in mind so far.
Thanks, Mike. Ross, you wanted to come in.
Yeah, just maybe to add a little bit of context as well. I think we're in a different place than we were in the last couple of consultations too, in terms of cleared off a lot of the real nagging items that were on our very long list of projects for a long time. And we're now pivoting to this new phase where we have maintenance activities and, you know, formalized post-implementation reviews. So I do think being more open and less prescriptive on what those projects might be is helpful. That being said, I think the document's going to have to strongly emphasize the project prioritization criteria, and that constituents need to make their case for the project using those criteria, and that it has relevance on an international level, and it's something this board should be doing because, you know, having been involved in the last couple of consultations, you always get people's pet projects that are really important in their jurisdiction, might not have international relevance, sometimes don't even relate directly to financial reporting. It could be a budget project or something because they look at the broader PFM. So I think we have to be clear on what we want to hear back using the project prioritization criteria. I don't feel super strong that, you know, what we put in our list or not. I think our lists are our list. We did test those when we went out in the strategy finalization to make sure we had the right projects. So we've asked constituents, that's how we've ended up with those lists. But it is a shorter list on financial reporting. But that doesn't necessarily mean there's nothing to do. That's just the outstanding, you know, legacy projects and where we are. So I think we've got to get that. That's the challenge in this. The real challenge is getting that narrative right so constituents can see what's on their plates and articulate back to us in the way the board's going to need to have the information to actually make the decisions in 2026.
Thanks, Ross. Angela.
Thanks, Chair. And sort of really building on both Karen and Mike's interventions, I really like the 4 quadrants of our strategy. And I'm particularly interested in encouraging, supporting jurisdictions to adopt accrual accounting using IPSASB. And potentially the interplay with the listing or the number of financial reporting projects we put forward, because I'm assuming as a country or as a jurisdiction looking to adopt a full suite of IPSAS, the questions there must be some difficult strategic questions when the board is working on, say, a new revenue standard. Do you wait for the new revenue standard before you adopt accrual accounting because it's so pervasive, or do you start on the old one and transition? And I think I wondered as a board and as staff whether in terms of the strategy and how you present financial reporting projects, are there ones that are going to move the dial and be helpful for first-time adopters? Are some pet projects and are, won't move the dial, are at the margin and are just noise to first-time adopters? So I wondered if that was something that we could maybe just incorporate in criteria of that list or prioritizing that list. And then I think we've got another constituency, which is the more mature jurisdictions that maybe have been on accruals and using IPSAS for some time. There potentially could be a conflict with that first-time adoption. So maybe a jurisdiction on accruals and IPSAS for a long time has a real issue with a standard, but as a first-time adopter, you just want to know what's the standard. So I think there's something about connecting these lists of projects without losing sight of what people have said before, really connecting them to those quadrants, but particularly with our maintenance and our post-implementation. Sure, we've got the maintenance, but is this an opportunity, a space in our evolution to really try to really push adoption of accrual? So it's about the effort and the balance you put. And I suppose further to that is the balance between the sustainability quadrant and the financial reporting quadrant. So the strategy is fantastic because it gives us such a good framework, but how to balance those quadrants is now the criteria that I'm looking for in a way, but it comes through in financial reporting because traditionally we just put a list of standards to fix or review or pick up, driven a lot by the ISB work program. But do we have an opportunity to stand back and sort of set our own agenda? Do we have to align straight away with an ISB project if something's more important for first-time adopters?
I mean, in terms of the project prioritization criteria, I think it's hard, because we have got 4 factors that we've consulted on in the past through the strategy, and those are confirmed. And I think it's also quite hard to balance between existing jurisdictions and first-time adopters because they will have different drivers, and probably, what might be a pain if you're an existing user but actually creates a better standard going forwards. It's almost impossible to kind of go, well, we're doing that for them and we're not doing it for you. I think that's something where there may be something that can be done in terms of some of the description that goes with it. I don't think we can put it in the formal evaluation for that reason. I don't think you can say, well, we don't care about existing adopters. So, but I think there might be some contextualization that could be provided, which I think would go to that point. But I think also, we've got this context that actually, pretty much you have a suite of standards now that we've picked up essentially the ISB's literature where it's relevant. We've also done the public sector projects that we've been told are relevant. So in a sense, actually, we do have a bit more of a free hand now. I think you're right. And actually, it's probably good to draw attention to that in the kind of preamble chair's message, that kind of, where we are, and therefore actually genuinely there is a real question here. So I think that's probably, maybe that's the sort of way that we handle it. Ross, I don't know, and then I'll go to Andrew.
Yeah, can you take us back 1 slide? 2 slides, sorry. Yeah, this one. Because Angela, you hit a couple of good points, and I just want to clarify a little bit on how the team works in the two different buckets. Because I do think the answer, and I think you had some great points, but some of that's probably already in our strategy itself when we approved it. We just need to have that as context for why we're adding projects. Because we did a very good job, I think, in delineating these two work streams. So the top one, delivering global standards, those are the two areas where we have projects on our work program that come to this board and we develop standards. Now, inspiring implementation, adoption implementation is how we work with organizations like World Bank, IFAC, IMF, countries, regional bodies to help ensure that the whole system's ready to support an adoption implementation. So I think there is an indirect link back to the projects through that work stream, but we're not anticipating we'd have a specific project for the two below. And that's kind of already described in our strategy up front now. Beyond this, that kind of sets the stream on where we are and the context for the strategy when we went out last year on this and finalized it, in that we're in a point where there's more adoption implementation and a group of growing users that are on the standards already as context for why we came up with this strategy. I think now we have to carry that through, as you suggest, and make it clear that the projects we want to work on now are based on where the community is in general. Some of those might be adopting, some of those are on the standards, and how do we balance a work program to give everybody a little bit of what they want?
Can I answer quickly?
I think that's very helpful. I just see a connection, I think, in a little bit in terms of the IASB at one stage was putting out a lot of projects and then they paused for the communication project. And I think a lot of constituents sighed a great, sigh of relief. But I can see a connection between perhaps promoting adoption when the quadrant above is a bit settled and there's not a signal of potentially 12 projects that may or may not come on. So there's something around a settled suite pretty much there on financial reporting, which must help strategically your decision to jump to accrual. If it's a moving target, strategically, it's like they keep, new projects are being added. When will we have a settled suite? Now, I'm not saying we should do nothing, but I just wondered whether that actually impacted countries' strategic decisions to go to accruals. So it was more sort of the connection.
I mean, I don't think from the discussions that we've seen, and if you take, say, Europe as an example, I don't think that kind of, is it settled or is it not? I don't think that's really been one of the drivers. I mean, okay, those jurisdictions that are adopting within Europe might disagree, but I think it's actually more the fact that now you do have a more complete. I always resist saying it's complete because you can never say that, but I think a much more complete suite of public sector standards, and genuinely I think you can now say that IPSAS are the international standards, financial reporting standards for the public sector, because they're high quality and they're complete and so on. I mean, to your point about a pause or a stable platform or whatever term, I think that's what we're doing now in terms of, if you like, our major financial reporting project is presentation of financial statements. So we're not doing major new projects which change recognition and measurement requirements. Clearly, we have done quite a lot of that through revenue measurement and so on. Obviously, natural resources would be when we get to finalising it, that is covering a new area, but it's public sector specific. It's our standard, and then I think this is an opportunity for people to say, well, where next? So I mean, I think it's going to be a genuine debate, and perhaps that's back to maybe that does put you in a different place in terms of how you position it and so on. But I think there's a balance to be struck, because we're definitely not. It's within the context of the overall strategy. So, sorry, just shared my of the, but Andrew.
Thanks. So it's perhaps similar to what we've heard before, and just in terms of how we position, I think, the work program. So I mean, I agree with Angela's concerns. I think if you're from a mature jurisdiction, you might also just appreciate the pause, because you're still trying to catch up with the suite of frequent changes that we've had in the past. But I think it's the current reading or proposal that I've got is we're going out and saying we're going to have one major financial reporting project, one major sustainability project, and then we've got space for, I think it was two minor projects. I wondered if there's a way that we can sort of better communicate that it doesn't commit us to sort of in that very rigid format. So it gives stakeholders the opportunity to come back and say, well, actually, maybe there's 5 minor financial reporting projects, one major sustainability project, or whatever the composition is, because that might then, if they do want to pause on major financial reporting projects, gives them that space and says, well, these are the small niggly bits that still need to be addressed. Can you rather focus on that? And then just the list that we're kind of putting out, I've also been to and fro between Mike's views and Karen's views, and I can see putting in the list there. I think the one thing just with the list is some of the, what maybe I personally find sexy topics on there in terms of intangibles and provisions. There's maybe just worth pointing out the caveat there that, we can't necessarily always start those depending on, we've got to wait for the ISB's work potentially. So just to also, I think it helps stakeholders know that, we maybe can't start that immediately. That's 1 year, 2 year, whenever the ISB finishes, just that they can also phrase that in terms of their responses on timing to us.
Thanks. I think that's a very helpful discussion. I think it teases out some issues, and I think the main thing we've got to spell out to constituents is there is only a finite amount of resource, and I think to your point, then actually, yeah, I mean, they could come back and say, yeah, there are 5 narrow scope projects we want to do, but I think we just have to very strongly caveat it. Yeah. Okay.
Okay, so with that, let's move to the next agenda paper, item 12.2.2. So this is on the first category of projects for financial reporting projects. So before we get into the discussion on these projects, and we can take into account everything we've heard about where we actually place this in the document when we write it up, but just in terms of the list that's provided here, we wanted to provide a little bit of context just on where this came from, just for new board members especially, and continuing board members. So when we were putting together this list, what we started with was the list of financial reporting projects that were in Appendix A of the IPSASB's finalized 2024 to 2028 strategy and work program. And that list came from where the board was starting with the previous 2019 to 2023 strategy and work program consultation. And that had been updated to reflect projects that were taken off the list because they were completed, or items that were on our current work list in progress. We looked at, when we were doing the strategy, whether projects still required a standard setting solution or not, or if one wasn't needed anymore because maybe it had been solved another way through issuing non-authoritative guidance like a staff Q&A or something like that. We considered the international relevance of the project in the current environment, and then input received from stakeholders through the IPSASB's outreach activities, as well as any additional projects that stakeholders highlighted during our strategy consultation that we just had. So that's where we started with. So that's why we started with that list that was in the strategy. And then we considered changes in the reporting landscape since the strategy was published last year. And 3 new projects were added to the list from that. A potential project on IAS 37 provisions like we talked about yesterday in the education session, a potential project on RPG 2 financial statement discussion and analysis related to the expected changes the ISB is making to IFRS practice statement 1 management commentary, which is almost finalized, and a potential project related to intangibles, which we discussed yesterday. So we'll put that on pause and bring back the information that was requested in June. But that's basically where that list came from. And then the project prioritization criteria that was in the appendix that listed the summary of the project and then each of those 4 project prioritization criteria. As Ross mentioned, we previously consulted on those criteria, and they're basically trying to cover, how prevalent is the issue? What are the consequences of not having that guidance in? Is it impairing accountability and decision making? How urgent is it that a constituent needs that information in there in the near term? And then is it feasible? Is it technically sound? And do we have the resources to be able to complete it in a reasonable amount of time? So we did include that information. I think we'll probably decide in what format that goes into the consultation or if it's in a separate supporting document. If there is any editorials on that information, if you could pass that along to staff, that would be helpful, because then we could bring back a more up-to-date document for you in June to look at. I think that was the main points I wanted to make there. So what we'd like to discuss with you then is just, do you agree with this list of projects? Is there anything missing? Is there anything that should be removed? And then we can discuss the placement of it in the consultation later, taking into account the feedback that we've received so far. So back to you, Chair.
Thanks, Saya. Comments, Claudia?
Thank you for the presentation. And I'm wondering, as we have IPSAS 18 excluded from the peer review process, so it would be then now an option to add it to the major financial reporting projects, to have an update on it, because this was one of the reasons we say it's maybe not a good candidate for the peer review because we need the research or whatever before. That it's one. Then we have IPSAS 21. We received, I think, also responses to the measurement project feedback that they should be looked generally to review the whole standard. And I think we had it in the past as well in the work program consultation. So I'm wondering if it belongs in this category or in the peer review category. And then what I'm wondering is, maybe it's not in the major financial reporting project scale. We have this phase 2 of strengthening IPSAS and GFS, and we have phase 3 of the materiality project. Should it be on the list to make, or if it's already on the list by itself and will be selected on different criteria? So I'm not sure what we have with this phase approach projects, how they will be selected.
So good point on the segmented reporting. I noticed last night when I was looking at the papers, we had related party disclosures still in the limited scope project. So that's something we'll have to clean up, and we'll make sure that we slot those into the right spots. On materiality phase 3 and the GFS IPSAS alignment, when we drafted this document, we weren't looking to consult on those. The IPSASB's already agreed to do those, so we've continued on, and you'll see in the next few slides that we've added a bar and extended the bar so that the board resources are considered already utilized on those projects. You don't look convinced though, Claudia.
When you're going back to what you proposed there, that's not there. Phase 3 of materiality is not there, and phase 2 of strengthening is even not there.
So I think there's a need to actually make sure that if you like, all the various different bits hang together. I think that's fine. But I think the suggestion in terms of segment reporting in particular, I mean, if, this is where I think one of the very important, again, if you look at the IPSAS IFRS dashboard, that's a really important logging tool in terms of where are we. And so if you look at the detailed analysis of that on table 1, basically segment reporting is the one area where we were on an out-of-date version of a project. So that would be a justification, I would suggest, for putting it on the list. And then we just need to make sure that this, what we see back in June, reflects all the various different other moving parts, and there are quite a lot of moving parts at the moment. So I think that's the instruction to staff on that. So take some more comments then, and I'm not sure the order in which the flags came up. Oh, sorry. Abdullah first, then I'll go to David, and then Andrew, Karen. Okay, whichever.
Thank you, Chair. And sorry if my comment would be more related to the previous discussion, but just looking at it and looking at the projects I'm trying to look at it from the strategy angle and seeing it from what would be the success factor for the board when we are talking as a board. Our success factor out of our strategy, would it be to have more jurisdictions implementing our standards, or would it be to have more complete set of standards, suite set of standards, or just to be on the sustainability field? So when I'm looking at that, I'm just reflecting on what we should take going forward to build on that. Once we define where we want to label us as just a board that is issuing financial and sustainability accounting standards, or would it be also for us to have more weight on, specifically for the new strategy, to have more jurisdiction being implementing our accounting standards? Just taking a cascading it from there, that would play a role in our if I would suggest, that would play a role in the projects that I would prioritize. I would just go, if I'm saying that we would want to have more jurisdiction implementing our standards, or just having the target that we are setting for 2030, then I would lay more emphasis on the projects that I'm hearing from jurisdictions that want to adopt our IPSAS standards. That is where I want to reflect on, because I don't want to go and put more time into a couple of standards, or just to have work on number of standards in our work program that might not be implemented by New Zealand or UK or other jurisdiction. Whereas if I work on other standards, that would be more applicable and prevalent to other jurisdictions. That is one comment. The other comment that I would want to hear from our staff team, that being traveling and hearing from different regions and having inputs from them, not necessarily we get feedback from this jurisdiction replies or written replies. They might be having a discussion, offline discussions, that would also be a key inputs on the proposition you're looking for, because of discussion that I'm hearing from the discussion, visit them, I don't see them on the board table, because they don't, and I understand that might be a perfect scenario, that we want to have official replies being articulated and in a right way, but I want to hear I would want to inputs from the staff team, and just have weight on that, and plus also pretend to my comment on, do we want to position ourselves where we want to be? Thank you.
Thanks, Abdullah. Ross.
Thanks for your comments, Abdullah. You broke up a little bit at the end, but I think we caught the gist of it. I think to answer your first question, I think it's up for the board to decide, but as staff team and what we're trying to achieve, I think the adoption implementation of the standards is, the measure of success. What's the point of developing the standards if they're not being used? I don't think it's helpful, though, to differentiate between the financial reporting or the sustainability work program at this point. One, we don't have any sustainability standards yet, so there's nothing to adopt. So we still got some work to do there. And we probably don't want to get too far ahead of ourselves on that. On the other side, I have to be honest, when we do go around the world and talk to people about the standards, I've almost never heard the barrier to someone adopting IPSAS is, you know, we haven't done a little bit of work on standard X, or this new standard's coming, causing problems. They're bigger challenges. It's political will, it's capacity building, it's lack of accountants in our department, it's not knowing where to start. It's not the technical standards. And I think the board has probably already started to move down a direction that helps on that with the application panel and post-implementation reviews. So I don't think this consultation is going to, you know, really unlock a hidden key on how to get people to use it. I think it's already in front of us and getting the application panel running and starting post-implementation reviews, which are a formal way for the board to actually get feedback on its standards before it starts setting standards. And I think that's really important. So I personally don't think we should have many projects on category 1 that don't go through a PIR first, because then it's just the board starting to set standards without any information on how the current standard's working. And I think that's, you know, a little too inward looking when you're trying to get the world to use your standards and there's just set up formal processes to get feedback on those standards. So I don't think we should fill this list up much more than what's there, to be perfectly honest.
I mean, I think the other thing that we do need to bear in mind is the adoption and implementation is not within our control. So we as a board can't say, well, we want another 10 jurisdictions to have implemented by X. It just doesn't work that way. It's down to decisions at the jurisdiction level, it's down to funding, it's down to political will, it's all of those kinds of things. So I think we have to be, we can play our part in that, but we've got to be very careful in terms of setting any specific objectives, because we're going to fail, frankly, because the number will be either below or above or whatever, but it's not outside, it's not within our control. If you look at the top, I think, you know, probably actually what I paraphrase, you know, I mean, what we want is as complete a possible suite of standards that addresses the needs, the reporting needs of constituents. And therefore, actually, that's what the criteria are trying to do. Now, I think the discussion is quite interesting in terms of where we've got to today, because I think when you look down the list of criteria, there's prevalence. Now, that issue could be widespread across all jurisdictions, or it could be widespread in certain areas of the world or whatever. So I think there's some, you know, there's some questions around that. Consequences, actually, potentially, that actually does manifest differently, whether you're adopting or whether you're a mature, you know, user, and potentially urgency as well. But I think the challenge for us as a global standard setter is there's no one answer to any of those. We certainly know the answer to feasibility, you know, in terms of, but I think that's going to be the challenge. So in a sense, actually, that's up to us as a board to moderate between those, and in terms of the proposals, and then that's why we're going out to get feedback, both from national standard setters in the forum, and so, yeah, I think it's quite hard, other than a very high level objective, to really set anything that's meaningful. We can maybe have a look at some of the wording to just, you know, because I think there is something we can do about that, but I think, again, we just need to be quite careful about setting ourselves up. David.
Thank you, Chair. I think I've got 2 or 3 comments. One is, having been around for a few years now, some of those things on that list have been coming back and back and back again. So how can they be major? If we're looking at major financial reporting projects, I mean, I tend to side with Andrew in terms of I mean, IPSAS 31 and Claudia IPSAS 18, there are certainly things that are much more important than things on that list. I certainly would go along with the idea of not putting the list in the core text, but emphasising the need for jurisdictions to explain why, using our criteria, they think that a project should be taken forward, unless the board decides that there are certain things that we must take forward, which could be subject, of course, to IPSASB's work, could be 31, could be 18, because we know that's causing problems. So I think perhaps a little bit more finessing of this is required.
So in terms of this, these aren't evaluated on whether they're, by the criteria, it's just major in terms of the work effort. So that's why they're major. Anything on there, staff's perspective, we think it will take a lot of resources to do the project that's been described. Not whether we should do it, not whether it's the right project, but whether that project would be done. And I'll bring the comments I made yesterday. I don't believe in minor scope projects because they always end up major, but.
Well, I hate to contradict you there, Ross. If you read that, it's a major financial reporting project. Doesn't say it's major staff resources. It looks as if it's a major financial reporting project.
Okay, we certainly need to just reflect on that. I mean, the trouble is, whenever we talk about major or minor, then people want to get into definitions, and I think we can say that we'll take significant levels of resource, and then that's reasonable. Bearing in mind, though, they're all different. So, okay. I mean, the trouble is, some of them have been on the list, you're right, for a while. Disclosure of tax expenditures, to take one that's been on the list. But on the other hand, actually, we have, we have consultants on the list, and it's on there for better or for worse. So it's probably the one actual new, unique public sector project on the list, actually. The rest actually are very much driven by, changes in IFRS at the moment. Maybe that's a consequence of where we are in terms of our suite. So, Karen, then Andrew, then Patricia.
Thanks very much. I think the thing I originally wanted to say, I think keep wanting to respond to things that other people have said as well. But to kind of Abdullah's point, I think what might be important out of there is to capture information about how people's suggestions link to the 4 quadrants without promising to do anything more than that, but it might be useful to capture people's thinking as part of that might be useful going forward. In terms of the list of projects, I'm kind of still where I was before, really, which I think if we don't think they're good projects potentially, or they're not as don't have higher added value, then they probably should go in the appendix to not give them too much prominence. But if there are projects that we think we absolutely should be doing, then they should be, in my view, in the body of the text so that we can consult on those specifically. But that was not the point I wanted to make. Mine was a slightly different one, which is about RPGs. And there's a question in my mind, having read this, whether we need to explain anything about RPGs, because a couple of the RPGs are sort of shifting towards sustainability, and we don't really explain that. And I assume if they go towards sustainability, they'll move from an RPG to a standard. I don't know. So I think my question is, do we need to explain a bit more about the approach to those, and in terms of how relevant that might be in terms of the feedback that we get? Thank you.
I think you put your finger on a very good point there, Karen, and I think maybe we are going to have this conversation in terms of the status of what the output from phase 2 of materiality actually is. And I think, you know, perhaps if we have that discussion, because we're going to have that discussion, aren't we? Let's start that discussion in June and see where we get to, because it does have some, you're right, I mean, and this was said in December as well, there are some consequences in terms of the architecture of our guidance. And there is an argument that we should be more, you know, we should be upfront, and there's no answers to that at the moment, but actually about exposing that concept. And I think, you know, let's, yeah, so if we take that one forward, but I think the point is right, that somehow or other we're going to have to address that point. And it sort of comes into what Karen will talk about shortly. Andrew, then Patricia, then Adrian.
Thanks. So it's maybe taking Karen's point and extending it a little bit further, but I did wonder whether we should be thinking about something around just looking at our landscape and actually helping people navigate what the landscape of IPSAS is and how it fits in with other forms of reporting as well. So it is the RPGs, it is financial statements, it is sustainability statements, for example, performance reporting. And I mean, starting to hear noise already around, well, if we've got performance reporting, do we need sustainability? How does this compare? How does it conflict? And I think also just the purpose of these different things. So listening to some of the conversations on Monday around natural resources, should they be on balance sheet, should they not be on balance sheet, and what information we want out of that, I think there could be a useful piece of information to explain, well, what does each piece in our literature actually try to achieve? What are the linkages between this? Just so that people actually understand what this complete suite of reporting actually is and looks like and aims to achieve.
I mean, I think it's worthwhile thinking about your point about the overall context, because I think that's where we were starting to do that thinking in December, and there might actually be a relevant framing piece depending on where we go on the discussion about RPGs and so on. So that might be. I think we also just need to be aware about overthinking this in terms of, you know, what's the intention of each of the, I don't think we can do that at the standards level, but there clearly is some thinking then about that overarching landscape. So I think that's probably, you know, so I think that's probably a let staff go away and have a think about that, because that would actually, I think it's probably worthwhile to think about how does that perhaps reframe the way in which the document might be formulated. Patricia, and then Adrian.
Thank you. I connect with the discussion that you had about the post-implementation review. I think for me it's so confusing how to divide the project in two categories, and category 1 and 2. And more specifically, I think the message in the work, the strategy and work plan is, oh, we will have one more complete suite of IPSAS, and now you prioritize the maintenance activities. Maybe need to better articulate what is maintenance activities, because when I see this paper, I have a lot of major projects, the financial major projects, alignment major projects. Some projects in the category 2 is aligned project 2, like segmental reporting. And what the time or the resource that in fact are you dedicate for maintenance activities, and to hear from the constituent about the what is not working in relation to the existing IPSAS. I think it's, for me, it's not clear how what is the think about what is post-implementation review. It's not clear for me at this moment, and how to conciliate with the alignment with IFRS, because the users of the standards, IFRS standards, indicate some problems. Problems can be the same for us. This is a post-implementation review. It's an alignment project. It's because the message here, I think when I see, okay, I give the message, it's a maintenance activities, but now I think a list of projects, 8 projects for financial report projects, and many less projects as post-implementation review. I think you need to think more about how to manage this.
Rose. Maybe that's the real trick on all these projects. Maybe we're trying to be too specific on how we classify them and just have potential topics and just say the board will receive the input from constituents on their proposal using our prioritization criteria and make their decisions, and then based on the resources available, allocate to the work program and not try to be so specific. And, you know, I think we've tried to use an old formulation where we were very specific on what we wanted to do. And I think it's clear that it's not resonating and it's confusing. And, you know, Patricia, some of the points you made are right. We've got maintenance activities now, which are already there. And now we're asking what we should do. We have to be a little more clear. So maybe we just make it a little less specific. Maybe we don't have the projects in the document itself, and we make it clear on the process and using the prioritization criteria for constituents to tell us their priorities based on us being financial reporting and sustainability standard setters. Leave it more open, and they tell us what their issues are. And they tell us what they think the projects are we should do using our criteria. And then the board reviews that next year, goes through it, decides, and looks at the resources available and decides what to put on.
I mean, I think again, it comes into communication, but I think you're right. I think we say, you know, we should say, right, okay, ultimately it's a board judgment, you know, and actually that will vary, that will change as well as we move through the, you know, projects and so on. But I think you're right. I think we say, well, you know, you tell us where you would put your priorities, and then the board will make the decision based on what it's heard. So we can put that out there in terms of here's a list of potential standard setting projects as we have it at the moment. Here's our view on the relative priorities. You tell us. And similarly, I mean, the PIRs, I think maybe we might want a different approach on that in terms of actually how we describe that process and whether we actually give them a list or whether we actually, anyway. I think your point is well made, and it's certainly, I think to your point, Ross, I think then it does actually challenge us just in terms of rethinking the presentational approach here. Over Adrian, then I'd like to move us on.
Well, I have 2 comments. The first one is to support and add to David's comment on the way we should organize the consultation. I do believe that it should be left to the respondents to, based on our prioritization criteria, make their proposals about, okay, what is of high urgency. We don't have any project of high urgency, for instance. Maybe some of the respondents might believe that there are some projects or some areas where there is a need for work by the board. And if we, as the board, have some very strong beliefs of a list or a number of projects that we, as a board, believe are to be carried out in the work program, then we should ask them to provide robust, argued objections to our views. Only. Not to start commenting on, okay, we have our views, we support the views by our prioritization criteria, and then we could ask them, okay, what would be your objection if we put that in the work program? Example is the disclosure tax expenditure. At the time we had the meeting in Cascais, we had some discussions on that. And I remember at the time I was strongly convinced that this was a good candidate for a future item in the work program. Namely because as a public auditor, we think as public auditors that this is a very critical area where the problem is not that of being able to identify the volume of the foregone revenue, but why are there tax exemptions in relation to a public policy, and what's the efficiency of the tax exemption in relation to one or the other public policy. So this is a real, substantial issue that hovers over the issue of what's the volume of tax exemption or foregone revenue. And I believe that we might not be in a position to provide enough guidance on the way to disclose, because it's very complicated. Usually, public departments are sometimes not even able to describe the impact of some tax exemptions in relation to one or the other public policy. So how would we deliver guidances in this area? So again, now I would remove it from the list, because it might be misleading for respondents. Some of them would think, oh, this is a very critical area, and yes, the board should go down this way. But in fact, behind the scene, it is much more complicated than everybody thinks.
Okay, thanks. So I think there are a number of specific points that have been made during that discussion. I think staff got quite a lot to do to take it away and work out how do we present this. I do think we should take a leaf out of the ISB's book in terms of how it constructed the equivalent consultation, in terms of, how they presented relative, how the projects worked relative to very similar criteria that they have as well, and how the projects are described, and this bigger picture issue that we have facing us in terms of the guidance landscape. So I think all of those factors basically need to be taken away, and then come back with a proposal in terms of the June meeting. The one specific project that we have added to that list is the segment reporting, for reasons of it's out of date, therefore it should be reviewed, but it needs to be sat in the context of where we are and maintenance activities and so on. So I think a lot of good feedback on that. I'd like to move us on though, because I think there's other things that we also need input to as well. Saya.
Thank you, Chair. So moving on to the second category on post-implementation review projects. So there is a short list here, and just a little background on how this list was developed. There was quite a long list of post-implementation, of potential maintenance projects is what we referred to them as in the appendix to our finalized 2024 to 2028 strategy and work program. And we started with that list that the board consulted on, and looked at any feedback we got through the strategy consultation. There was a number of projects that were taken off the list. So one of them was segmented reporting, because it was going to be a potential PIR project. Now I think we're adding it back to category 1. We took off IPSAS 22, disclosure of financial information about the general government sector, because that ties into the project that Joao is working on right now with the GFS linkages. We also took off a project on IPSAS 40 public sector combinations, because it was a project that was linked to work that the ISB was doing on business combinations under common control, but they ended that project and they did not make any changes to the guidance. So there's no changes for us to look at. And also we removed RPG 1 and RPG 3 from this list, because they are in category 3 that we're going to discuss next. So we're left with a very short list. And I think we weren't concerned by having a short list. And I think from based on the discussions, maybe we should have no list. And I don't think that's necessarily a bad thing, because if you are a respondent and you want to tell us what's wrong with the standards, you're going to tell us that, right? So I don't know if you necessarily need a list to inform you of that. So either having a short list or having no list, I think either one could be useful for respondents, because the point of the PIR project is for them to tell us what's an issue with the current standards, what's not working, and then for the board to consider, do we take that on, go for an RFI, do an actual PIR on it and see what comes back, and then potentially take on a financial reporting project as a result of that. So I'll open it up or turn it back to the chair to open it for discussion.
Okay, thanks, Sarah. So I think, let's sit this in the context of some of the discussion that we had earlier on in the week. I think perhaps that clarity that's required about what is a PIR, what is the purpose of the PIR. We've already asked staff to do that quick and dirty survey of standard setters in terms of, which are the ones that are not being used or are being heavily adapted or whatever. And that would doubtless be useful input. But, perhaps back to the what would we ask? Maybe it's actually putting our views out on how we would actually prioritize topics and getting some input on that, and then asking people, well, on an open basis, then where would you put the priorities? And then the board can use that input. Anyway, Karen.
I think you just made the point that I was going to make there. I think that perhaps unless we've got some better information, not having a list is probably the better way to go, and maybe explaining what a PIR is and what we should get out of it and why a particular topic is being proposed. Mindful of the discussion earlier this week, I don't know whether we'd be able to put criteria in, or we can maybe use this to help establish the criteria, depending on how we frame it. But I think it's probably more about setting out the stall rather than asking for comment on a specific list at this point.
Agree with all that. I would say, though, I think we'd apply the project prioritization criteria we already have. I think it's still relevant for PIRs.
I guess the one thing, though, that you do need to factor in there as well, I think it's worth reflecting on that, because I think there might be, how long has the standard been around, and there are also the factor about what we know about.
Isn't that just urgency? Like, maybe it's applying the criteria to the problem, but I think I wouldn't go too far off what the board's been using for the last 7-8 years and consulted on multiple times. It's just going to get confusing for people.
Because I think that is the backbone of it. But I think if you get 20 projects that tick all the boxes and you evaluate as high in that context, which one is going to go first? So it may mean that there's some other criteria that we just need to think about that build on that.
I mean, I think what comes out of this discussion is maybe actually it is that those broad project prioritization criteria, but there are some specific bits of information that we use in interpreting those in this context, and maybe that's actually where we start this off. Yeah, I think it is actually. So perhaps let staff go away and have a think about that. Ross, Dave.
Well, I was just going to say this is a point Ross made earlier, but it might even be a little easier than that. If we just ask what the priorities are and we get a list of current IPSAS, then we'd have to go out and find out what those issues are through PIRs. It was kind of Ross's point on potentially our category 1 projects would mostly start through PIRs. So maybe we don't need to delineate as much as we had been in our proposals. And it really is a little simpler question of just what are the challenges? What does the IPSASB need to look at?
I mean, I think it's important in the way we position this, isn't it? Because these are not, people are not bidding for projects. Actually, these are reviews that may or may not lead into projects. And I think we need to make that very clear that this is the maintenance program, and therefore what we're looking for is, okay, how do we work that? Where, you know, based on what people know, where are the things that would be worth, you know, it's a stone worth turning over sooner rather than later. So yeah, and then I'll go to Angela.
I just wanted to clarify one item. So if we included a list of PIRs, we were not planning to put project prioritization criteria in for those because we don't know what the issues are with that list, right? We want people to tell us the issues because we might think there's certain issues with, say, the cash flow statement, but depending on who's responding, they might have different issues. So we weren't planning to put prioritization criteria into this consultation document. However, when the information comes back from constituents, I think we would use our project prioritization criteria in looking at, well, which PIRs to prioritize. But I think if we go out even with no list and we just ask, like what Dave is saying, what are the standards that you're having issues with? What are those issues? Can you explain them to us? We might get a really good list, and then we could decide what do we do a PRR on from that list potentially.
Yeah, I think that's getting closer to it. But what we might do, though, I think, is actually be explicit that we will use our project criteria, you know, and actually just remind people how we would think about those in the context of PIRs. And then, as you say, it would be useful to get, you know, information back in about what are the standards that you're having problems with, what's the nature of that, and how would you see that? You know, anyway. But I saw no appetite from board members for putting a list out. Angela.
Thanks, Chair. And it's really just to re-emphasise something that's actually already been discussed earlier in the week. And I think the importance of the survey that we have mentioned a couple of times. And I had imagined it was effectively a staff to national standard setter staff survey, but it does strike me that informal connection could be a fantastic source of intel for the discussion we're having. And so perhaps, although we talked about a quick survey, or perhaps given its ability to provide a little bit more intel than we have now, maybe staff just need to think about the survey and the questions in terms of staff to staff at national standard setters, because I just feel it could be such a good source of information, even if it's anecdotal, to help us perhaps with this debate on PIRs.
Yeah, thanks for the reminder of the importance of that. I think all of this is about us getting a pipeline of things that we're going to use for PIRs. So what it doesn't, that enables us to kind of get started, as it were, or move things forward. And then we can build on that then when we're hearing from, you know, other constituents as well. But I agree with you. I think it's, you know, we just don't have that information at the moment, so it'd be really useful. Okay, Sarah?
Thank you. So now I'm going to turn it over to Karen to talk about category 3.
Thanks, Saya. And category 3 is on sustainability reporting projects. And this really addresses a very important part of the IPSASB strategy. And considering the development of the SRS ED1, with a timely development of the final pronouncement, and also considering that there might be some further ongoing work to support the implementation of that, there might be space for us to take on one sustainability reporting project starting from 2026. And the board actually had a chance to discuss some of these projects in the December meeting. But for the newer board members, I just wanted to provide a bit of a background on each of these projects. So first project is developing authoritative guidance based on RPG 1, which is reporting on the long-term sustainability of an entity's finances. So the RPGs represent best practices rather than in the IPSAS suite. But with the after the development of the RPGs, we have since had the conceptual framework, which gives us that conceptual foundation, and also we have established the SRS, the Sustainability Reporting Standards, as a separate suite of standards. And so we think that the RPGs really fits well in the SRS standards. Not only does it address the one core pillar of sustainability, which is financial sustainability, but it also we've also used it in developing the SRS ED1. So that will be the first project that we're recommending into the sustainability reporting projects work program consultation. And the second project that we have here is developing authoritative guidance based on RPG 3, which is on reporting service program information. Now, based on board discussions from December, we've decided to assess RPGs 1 and 3 as two separate projects. This was both done to reflect board discussions and also so that we can actually get a better a chance for stakeholders to share their views on two different proposed projects separately. And this RPG 3 really proposes that that logic model of inputs, outputs, and outcomes. And if you remember, it is something that we used a lot in developing the SRS ED1, especially on public policy programs. And now the third project is on general sustainability related disclosures. So that is developing our SRS based on the IFRS S1 standard. Now, this proposed project was originally something that the IPSASB had included as a priority project for research and scoping in December 2022. And as a part of this project, we might also be looking at, for example, how industry-based guidance would fit into the general sustainability related disclosures project. I know I've received a comment on that, and we've reflected some of the board discussions in our project prioritization criteria as well, which is that there could be some connections between S1, general sustainability related disclosures, and also with RPGs 1 and 3. And the last project is on nature related disclosures. So this one was also a project that the board was a priority project that the IPSASB had in December 2022. And this really is just through adding a non-financial reporting aspects to the ongoing tangible financial resources, tangible natural resources project. And this addresses that key public sector role as a steward of nature, which is very unique to the public sector and not as maybe less important in the private sector. And there has been a lot of developing guidance on this. The IPSASB has been doing a lot of research work on this through their BEES project, and also the TNFD, the Task Force for Nature-Related Financial Disclosures, have also been put out their recommendations for this project, and also that is based on the 4 pillars that we are, I'm sure the board is quite familiar with, on governance, strategy, risk management, and impacts, and also on metrics and targets. And we've reflected a lot of those December discussions in the project prioritization criteria, but there could be some updates on how we present that based on the rest of the work program. So, but then I think it will still be quite important that we provide some context in to these proposed sustainability reporting projects, especially to people in the sustainability space. the RPGs might not be something that they would be thinking about, even though it does address a very important part of sustainability, which is financial sustainability. And to people in the accounting space, nature might be something that they're less familiar with. With that, I will pass over to the chair for some discussions.
Okay, thanks, Karen. Open up for thoughts in terms of how we present these options or the options themselves. Andrew.
Thanks. I guess I'm just a little confused on what do we mean by developing authoritative guidance in RPGs 1 and 3? Does that mean that they will go into the sustainability suite? So if you adopt the sustainability suite, then that's what we mean by, okay, if that is what we mean, I think we just need to be clear that that is the intention of that particular project. On the general sustainability related disclosures, Karen, I noted you said that potentially looking at the industry related guidance would fall under that. I think it would be better to put those as two separate projects. I think we could have an S1 alignment project and not touch the industry related guidance. Or people might say actually do the industry related guidance first and then do the S1 equivalent later. So I would propose we split those out. And then just to comment on nature related disclosures, I noted that we did put the feasibility of that at medium. And I did sort of pause whether it is really medium or maybe even low, I think, just given the resources and where the IPSASB is and generally the landscape. Thanks.
Thanks, Andrew. Ross.
I agree, Andrew, with your point about splitting out industry related. I do think we'd have to give some context that the industry related would almost have to come after the general sustainability. So if you look at S1 and how it works, it's additional guidance you put on the bottom of S1. So I think we'd look a little bit, lost if we just left it. You could start with industry and then do S1. I think logically you do the S1 and then industry.
Okay, thanks, Ross. Yeah, and I can understand where you're coming from on nature related. I'm going to take a round of comments, Karen, and then I'll come back to you. I think it's Angela, then Mike, then Claudia.
Thanks, Chair. And sort of building from Andrew's comments, one of the things I would like to be clear as a board before we clarify with constituents through this consultation is I'm unsure around the positioning of RPG 1 and 3 and I guess almost the hierarchy because RPG 1 reporting on long-term sustainability of an entity's finances without looking at the actual detailed requirements, I could see our climate-related disclosure standard could effectively be part of that broader long-term fiscal sustainability. Equally, I could see an argument that the ED that's out there could fit under a broad heading called reporting service performance or reporting performance without looking at the specific detailed requirements. And so when I read those headings or RPGs, and maybe people don't really, not familiar with them, I then look at things like nature-related disclosures. And I would argue if an entity is responsible for biodiversity as part of their remit, even if they do not meet the recognition measurement test to put that biodiversity on a financial balance sheet, I would argue that if they were required to do service performance information in a thorough and useful way for primary users, they could well they should well be picking up many of the biodiversity issues and policies and danger to species and things like that. So there's something unclear in my mind when we have RPG 1 and 3, and from a jurisdiction that uses both of them comprehensively, not the actual documents, but the same ideas. And then topics coming through the sustainability community who, as you rightly point out, have never heard of RPG 1 or 3, but are very interested in biodiversity, protection of rainforests, and the IPSASB's work program, which is very broad on sustainability. Something's unclear in my mind around how we position and think about strategically in the board where our RPG 1 and 3 sits strategically before, as part of going out to say, what should we work on? I may not quite have made sense, I'm not sure.
No, I think that's helpful actually in terms of, so I think from the earlier discussion, I think we are going to need to surface this landscape point probably quite upfront, because that is a live point. And then, you know, that does then the RPG 1 and RPG 3, I think, you know, that sets, there's a sort of scene setting thing there. They could all fit together, or they could all be parts of the same picture, or whatever, those first three. And I think that's where we need to actually get reactions to those as different parts, or, you know, because they would all need to be scoped. And I think we need to make that point. I'm wondering, though, whether, bearing in mind that actually the first three are potentially landscape framework type ones, whereas the nature related disclosures is, you know, is a more topic specific related one, but it's also a lot harder, as Andrew alluded to. And I think there is a question from the board point of view as to whether we would really decide to go ahead with that one as opposed to the other ones. So maybe actually what we should be saying is, look, we recognise the importance of this, but this would be more by way of a research, you know, on a research agenda type of thing, which then gives you more, okay, look, you know, realistically, if we're going to go ahead, because of the feasibility point of view, these would be the ones that we would actually be thinking about and we'd like your input on. So, Ross, I know you want to come in. I've just been riffing on a personal basis there, but...
No, I just wanted to come in because I think Angela's got a great point. Again, we have the RPGs, they exist. They've been there for 10 years. I go around the world, as many of us do, talking to people, and I've yet to find someone who's used them. So maybe the question should be, do you use RPG 1, 2, or 3? Yes or no? If you do, please explain how long you've been using it. Give us some information. And if they don't, why not? And is it because it's just recommended practice, not a standard? Should we consider making these standards in the sustainability if we're trying to find out what we should be doing? Because again, that guidance has been out there. It is good guidance. We've all read it, and you know, it's useful in the context. But if there's a reason people aren't using it, I think if that's what we care about, let's figure that out and then, you know, fix the problem if there is one.
Back on that very quickly, because I'm
just a suggestion is when you're doing the survey to national standard setters, if you could, a suggestion to add not standards, but also RPGs.
Yeah, good point. Okay, so Mike, Claudia, Scott, and Karen, and just recognising where we are time-wise, I'm not going to propose that we go through the papers on structure, because I think, you know, we've given direction which is going to change the structure around. So I don't think there's a lot of point in that, but I just want to finish off the round of comments on this area, because I think we're getting useful input which will direct. So Mike, to you.
So thank you, Chair. Just two comments. The first one is agreeing on that it makes sense on the RPG to make clear how they fit into our literature. As personally, I'm still not so very convinced whether truly sustainability standards coming from an, I know, UN SDG angle. The second comment is on that how C&D are presented within the work plan, and Karen, you're totally right that there are linkages to our consultation paper done before. So we have already certain formal feedback and consultation on that. And on C, I think there are, or there might be, or I assume there are really links to the consultation for SRSED1. And so my proposal would be to have that in mind and maybe spend, I don't know, 2 or 3 sentences on that, because I think even the consultation which now is closing, I think that will really give a flavor of what our constituents want. Thank you.
Thanks, Mike. Some very useful points there, particularly that last one. And picked up on that before. Claudia, and then Scott, and then Karen.
Following the discussion, I think we should give it a flavor in the work program consultation, what we planned with implementation guidance. If we finished with our first standard, then it might be imperfect. And we learned from the private sector, they developed a lot of implementation guidance for their part of the standard, own operations. We widened, hopefully, our standard by the public sector context. So maybe we need to deliver some implementation guidance when we going further, the first one step in, what we want mean with them. So we at least give a flavor how it would be in the work program fit in. And then maybe it's I'm not sure if already the financial resources is solved for the sustainability program. I remember when we started, they said we need additional resources. So I'm just wondering if we should remind that we still need some resources, or if it's already solved. That's
Ross, as somebody who's spent a lot of time on raising financial resources, to you.
So I'll take the opportunity to again thank the World Bank for supporting us, because they're helping with it, but it's not a solved problem, and it's not beyond climate. So there is an expectation that once we get to a standard on climate, we would have a continuing support, ongoing project and implementation like the ISB did. I think that's not even a question for constituents. If you go back to what we committed in May 2022, we kind of said that when we went out, so we're going to do this, that we'd get something out quick and we'd support its application. And I do think we have potential continuing support for that based off the funding we have now. So I think that's going to happen. I don't think it's a real question for constituents. The question's about what else and when. And we do need resources for that. So we are taking all donations, and anybody who's interested in talking about funding, I'll make myself available day, night, during the week, weekends, at your convenience. So please don't shy away from reaching out if you have unspent budget in your jurisdiction that you want to invest in standard setting.
And there's a pot by the door on the way out. But no, I mean, I think we'll pick up tomorrow morning as well the points around implementation, and then I think we can firm up on, you know, is that essentially a given, as it were, that's so I think points well made, and certainly the resource point as well. Scott, and then Karen.
Yeah, thank you, Chair. Just a brief comment, but I want to build on what Andrew said. I circled medium, Andrew, and said, how do you get lower than low on feasibility? So I think there's a risk of the board misleading people by putting it on the list. I would recommend deleting it, because what happens if we get it back and they all say yes? What are we going to do? I don't think as a board we're prepared to move forward. So I think there's a risk of misleading people by leaving it on the list. Let's wait to see if they give it back to us, but I wouldn't lead the witness on this one, because I don't think we're prepared to do it if it comes back. So I would take it off.
Thanks, Scott. Karen.
I guess I'm building on that as well. I really like your suggestion, Ross, about dealing with the RPG, because I think that helps actually kind of the positioning of it without having to position it, because I think it starts to take constituents on the journey and they have some input to that. So I think that's really helpful. I guess I've got a question about cohesiveness. So I think we were discussing earlier not providing a list of anything. in the other categories. So I think that then begs the question about what you do with sustainability, because it would feel a little odd that we're not doing it in one place and do it in somewhere else. I think we can sensibly have the discussion about the RPGs because that's something really specific, but maybe helpful in the point that Scott just made. Maybe we don't put anything else on there and see what constituents come back with, and then we don't have a hostage to fortune.
Well, if we did take the approach that we just described, that we have these RPGs and we want to know how they're used so we can decide what to do with them, they're off the list. And we just said nature-related resource disclosures is probably not feasible, so it's low or lower than low, which leaves us with sustainability, which was the main topic, or general sustainability, which was the main topic that people seem to gravitate towards when we discussed in December. So it's not really a list anymore. It's when climate's done, the next project in the queue that's logical is going to be general sustainability. And when we have the resources, we'll address it.
Subject to the discussion on implementation guidance.
And resources.
Yeah. Okay. That's useful. Angela, very final word, because we're up against
Just a very quick point on nature-related disclosures. Obviously, there was a lot of support for that on Monday with stakeholders. Secondly, we've yet to see any responses from the ED. And one of my personal concerns or fears was it was very much a financial reporting project that required recognition measurement criteria to get it on the balance sheet. And I did wonder through deliberations whether stakeholders had an expectation that this was a broader disclosure project. So it would be interesting to see responses in April check-in just before we position or even describe what we do with nature-related disclosures. So I broadly support where you're going, but let's just check in with the new intelligence that we'll receive.
Thanks. Yeah, I think on Monday, Svetlana was more picking up on tangible natural resources because she very specifically referenced reading the ED. So I don't think she was picking up on this, but I agree with you. We should position it in the context of then what we hear back. Okay. Good. I think those have actually been some very useful discussions, and certainly I think it will look very different as a document, albeit that all of this sits within the context of the overall strategy. But I think what you see back in June, will reflect the discussions that we've had and the kind of approaches and so on. So I think having the discussion now was incredibly helpful because it will shape what comes back in June. And it will also be up for discussion in June with the CAG as well. So I think with that, Dave, to you.
Just to let everyone know, if you watch your inboxes, Leo will be sending you an email in the next probably 20 minutes or so, probably by the time you get to your hotel, for you to be able to review the updates to the materiality project that Augustina and board members have been working on. Thank you to Augustina and the 4 or 5 board members that took last night to review what was proposed and help us write that. Like I said, you'll see it in your inbox in the next 20 minutes or so, and we'll discuss it probably first session after the closed session tomorrow morning.
Great. Okay. So with that, we close the formal session for today. As Ross said, private session for the members, except for me, tomorrow morning. Claudia will be chairing that. And then the public session will start at 10 o'clock. It says checking his agenda. It is 10 o'clock, isn't it?
Yeah, the session starts at 10, but the coffee will be served from 9:45 if anybody gets here on time. And then we'll start at 10 sharp.
Yep. Okay. So I think there is a brief presentation of financial statements task force meeting, and have a good evening and enjoy the homework. Thank you very much.